Yo, what up for y'all on the YouTube replay? I hope you're having a great Saturday. Let me give you a quick stock portfolio update, then we'll get into some of my favorite stocks. I have a new company I kind of want to share with you guys. Ticker symbol PODD. It's my newest position. I only bought 2 shares in them because the stock is pretty much at all-time highs. But I'm planning on making a YouTube video about this stock soon. Their revenue just continues to climb. I mean, this is a growth company at foremost. Their profits are seeing a little bit of I'm not worried about their net income right now. These are kind of one-time adjustments, making their net income multiple look really expensive, but they're deleveraging. I really like Pod. I'm going to make a video about them soon, so watch out for that. But yeah, here's my portfolio. This is my risk on account. If you look in the top left, we're only up 14% all time in here, so we really haven't outperformed the market. We have a lot of losers in here, and we have some losers that I've completely sold out of, so you don't even know that I lost money on them. So I just like being fully transparent. One stock that's been struggling is Sprouts Farmers Market, especially the past couple months here. Like if we look at them, like look at that chart right there. That's why I just bought a little bit more Sprouts Farmers Market. They could go down another 9%. Just from what I'm looking at. But I thought the risk reward was pretty good to buy some shares there. I do really love that company. And then right here is our buy and hold portfolio. So once I buy a stock in here, I literally try and just never sell it. And yeah, it's worked out really good in this portfolio on all these stocks except for Perion Network down there. Yeah, we have some popular names in here like Amazon, DocuSign, Coca-Cola, maybe Cover Systems. And then finally, we have our dividend-only portfolio. Yo, what up, Ant? Good to see you, friend. And check this out. Our dividend-only portfolio is up 13.6% year to date. These are all the stocks that we own in here. You've probably heard of a lot of these because all these are in the S&P 500. You know, I got Meta, Google, McDonald's, United Rentals, and then I have my small little Roth IRA. I'm trying to deposit more to my Roth IRA. It's only $3,000. I pretty much made this exactly 1 year ago, but these are all the stocks that I own in here. Some of these are high dividend plays. Some of these are high growth plays like Wix, InnoData, CRMD. These are some pretty interesting growth companies, but then I have some of the higher yielding names. Someone said SoFi should be in there. I do actually, or someone said, how much Hood do you got? Yo, I own SoFi and Hood. Those are both companies. I regret every share I've ever sold at both of those companies. One of my biggest mistakes was selling or trimming my position on them, but I only have 5 shares of Robinhood left. I only got 24 shares of SoFi left. I've just been so green on these positions. I trimmed a bunch, and so that's what I have left. So yeah. Why do you have so much money outside the Roth IRA? Because there's actually no burden. There's no real tax burden right now for me. I do like the Roth IRA, but in a main taxable account, here's what, did you know this? Like a lot of people don't know this, and I like to kind of teach this, again, not financial advisor, but this is my main taxable account. A lot of people like a Roth IRA because whenever you double your money on a stock or something, you go to sell it, it's completely tax-free. But also, did you know, even in my taxable account, if I go to sell my Meta shares right now, if I sold every share of Meta for $1,000 profit at this 41% gain, all of the revenue that I get, all this profit is completely tax-free, as well as this dividend. Whenever I receive a dividend, a qualified dividend, $2.63 dividend from Meta, it's completely tax-free, even in my taxable account, because it's taxed at long-term capital gains, not short-term capital gains. So that's one thing I don't mind about the Roth IRA, or I mean the taxable account. That's why I'm okay with my Roth IRA being so tiny, because I could have deposited more. I still can deposit more, but I'm just being slow to do that right now. But I still love a Roth IRA. So yeah, what's up, guys? We could look at SoFi too if y'all want. SoFi's a great one, no dividend though. I agree, Ro. SoFi, the lack of the dividend is made up for with the good fundamentals. The fact that they reinvest so much money back into the business. Let me give you a quick little analysis on SoFi. Here's why they deserve to be at an all-time high. It's kind of like Palantir and some of these other stocks. Their good growing fundamentals justifies this insane stock price appreciation. This is a fintech right here, and check this out. If we go to their financial services business, it is growing like crazy. And yo, ADY, thanks for all the roses there. I appreciate that. But yeah, this business is up 105% after going 80, after going 222. That's insane growth on SoFi. And that's just one of their business. It's now 42%. It used to be a lot smaller of a chunk. And then their main business, their lending, is up 30% year over year, also to a new record. I really think people are just starting to take SoFi serious. This orange line is what the analysts expect. They're beating on analyst expectations. margins, they beat on revenue, they beat on net income. And if we look at this right here, this is insane growth. Again, I think people are just really taking them serious. Revenue's up 42. They did 850 million of revenue, and out of that 850 million of revenue, 100 million of it was after-tax net income. I mean, the fundamentals are so strong there on SoFi. So yeah. Long-term taxes when you sell will be around 8%, not if you make under $55,000 a year. So I make under $55,000 a year. You can just look up 2025 long-term capital gains tax bracket. And if you make under $55,000 a year, which is me, I make a lot less than that, and you receive a qualified dividend or you sell a stock after holding it for 1 year, it's taxed at long-term capital gains. It's taxed at 0%, which is kind of cool. How do I know? Because I just did my taxes. And okay, let's see here. What is your cash interest? Oh yeah, so if you look at actually, I keep my cash earning interest in this brokerage right here. If you look in the very middle of my screen, I have basically $1,100 of cash, and it earns me daily interest at 3.85% APY. I basically get 12 cents every day in interest just for my idle cash. Yeah, you get a 3.85% APY. That's why, this is a brokerage where you buy stocks on, but a lot of people like it just for the APY. Yeah, if you want to get this app, by the way, it's in the link tree in my bio, the very first link. It's a brokerage. So let's see here. AMD stock. Yeah, let's do AMD though. That's good though, especially we shouldn't prioritize retirement accounts. Yeah, well, another cool thing about the Roth IRA, I will say, is that if you're a first-time house buyer, you buy a house for the first time, you can use, I think, like $50,000 of your Roth IRA towards that completely like penalty-free. Sorry, I need my water here. So yeah, let's look at AMD right here. I do own AMD, by the way. David said, what app is this? Yeah, hey, David, it's in the link tree in my bio, the very first link there. It's a brokerage. But check this out. Here's what I love about AMD, and here's some of the cool metrics we get with this app. Like, check this out. We can see their PC GPU market share. They have a 17% PC GPU market share. Half of their revenue comes from their client and gaming business, but a huge growth driver for their business recently has been the data center business. NVIDIA is big in the data center industry because data centers need GPUs. They need graphics cards, and AMD happens to make their own graphics cards, so they just supply them to their own data centers at the cheapest cost, and the newest models the quickest. And the actual fundamentals are growing over here. If we look at the FCF, which stands for free cash flow, it's up 4x year over year. That's insane. It went from 440 to 1.7 billion. And if we look at the net income, it's extremely net income positive, making a couple $100 million net income a quarter. They also have this absolute fortress of a balance sheet. They literally have no net debt. So for those reasons, I really like AMD. And full disclosure, I do own them here in my Growthy account. I got 11 shares of AMD. So yeah. The valuation is a bit high here, but I think I don't know if it'll be a better buy than NVIDIA. I do own them though. I might be biased, but yeah. Hey, what up? MB said Lyft stock. Yeah, this is a cool company. They're kind of like an Uber competitor. I will say I love Uber stock. I'm really bullish on Uber. And here's the thing, Lyft just now got profitable. They were a little behind. I think that's why the stock has kind of been a huge underperformer versus Uber stock. But check this out. Now is the actual most justifiable time to buy them because they're finally making real profits. If we zoom out here, this company used to burn through hundreds of millions a quarter, but they're finally, for the past 3 quarters, made net income every quarter. So that's great news. Also, if we look at the FCF, which stands for free cash flow, they're making a couple $100 million free cash flow too. So I like the fact that they're finally GAAP net income positive. So that's great news. Let's see what the analysts are expecting. They missed on revenue the most recent quarter, but they beat on net income, and they're expected to stay net income positive as well. So basically, for the rest of the time, they're going to be a profitable company. That's great news. All right. XRP. Yo, XRP, that's a crypto. We don't really cover crypto on here. I wish I could tell you thoughts on this company. Like, here's a cool feature about crypto. Like, they don't report earnings. Like, they can't miss on their net income. They can't miss on their margins. So there's kind of like a catalyst-free asset there, which is kind of interesting. Let's see. Deep said RZLV. RZLV. So this is Resolve AI. So I actually haven't heard of this company before, but check them out the past couple weeks here. Looks like they've really been momentuming higher. So a $1.9 billion market cap. So they're not huge, $1.9 billion company, but all their revenue comes from the UK. So this is a UK company. Or are they revenueless? Oh no. So yeah, for the entire year of 2024, the revenue was 180,000. Maybe someone in here earns more than this company. So just watch out. Like this is basically a startup, no revenue. Dang, and they lost $172 million on that. And this is a leveraged balance sheet. They have a lot more liabilities than they do assets. So from a pure financial point of view, I'm not seeing too much blowing me away here. Like literally 200,000 of sales for the entire year of 2024, a lot more liabilities than assets. I'd just be careful with that one. It looks like a momentum play. You'd maybe swing trade, but hopefully that was helpful. Can I see your long-term holdings on market? Yeah, what up, MB? Yeah, hey, this is my buy and never sell portfolio. So once I buy a stock in here, I don't trim it. I don't take profits. I try and diamond hand it. And I have some other portfolios where I don't do that, of course. Like I have my Roth IRA. I have my Webull account and stuff. But yeah, I just like being fully transparent. Thanks for that question there. Yeah, if you ever want me to show you anything. And JPS said a stock I own here in my dividend only portfolio. Check this out. So this is my Roth IRA, and here's my dividend only portfolio. I love a lot of these companies, Meta, Google, McDonald's, and someone said Constellation Energy. Yeah, what up, JPS? This is my favorite nuclear energy stock of all time. I've looked at all the nuclear stocks out there. Vistra, GE Vernova, Oklo, SMR. I've literally looked at all of them, and out of all of them, the clearest winner, like the purest nuclear energy play out there is Constellation Energy. There is no close second. They own the most nuclear reactors out of any other publicly traded company. Vistra Energy, VST, is it's not a close second, but they are second. But yeah, this is my favorite nuclear play out there. CEG, best fundamentals. They're doing synergistic M&A. They're doing dividends. They're doing buybacks. They're best management. Like I love Constellation Energy. Pretty cool. All right. Someone said CNC stock. I think this is Centene. Yeah, this is the company they're a Medicare Medicaid provider, and they've kind of just been they're like the next domino to fall after UNH. And well, let me verify that. So look. Yeah, 60% of the revenue comes from their Medicaid, and then 20% comes from their Medicare business. And then another 20% comes from just commercial people. But basically, UNH, CNC, they're all being investigated for overbilling the federal government. But for right now, wow, the sales are doing great. $48 billion in revenue, up 22%. But the net income just went negative. And so look at this. In the past, they're easily making net income every quarter, which is EPS. But look at the EPS projections. It's expected to go negative and then $1.20 negative. Like the net income projections aren't great here, and that's why the stock kind of collapsed. So this is kind of like a pseudo UNH play. They still have the government headwind. All right, so what should we do here? The Trade Desk, you know what? That's an advertising company. This is a TV advertising stock. They're kind of being out-innovated by Roku and Amazon right now, which is unfortunate. They also, they're just been getting hit with a wave of bad news. They lost Netflix as a partner. Netflix used to use the Trade Desk to find all their advertisers, and Netflix dropped them to go to Amazon. So here, let's go look at their financials. Honestly, here's the thing. I think this one might go lower just because the multiple is still high. If we look at their net income multiple, they're trading at 56 times net income. That's still not cheap. That's why I think, sadly, I wouldn't buy this one yet. I'd put them on the watch list. I'd heavily watch them, but I low-key think they might go lower because this multiple is still pretty expensive and the margins are starting to fall and they lowered guidance. So check this out. If we look at the revenue, this is the good news. The revenue is up 18%. So revenue is up 18, but the net income was only up by 6%. So that means their net margin fell by over 10% year over year. I think that did spook investors a little bit. I still like this company. This is why it's not just a company you just want to completely dismiss and don't put it on your watch list. I think it's worth putting on the watch list. They're making good money, a couple $100 million. But I think the multiple is still too high, and it's kind of like a super micro. I think there's still more room for it to go down. But the risk reward looks pretty decent if you just nibble on it. What was the previous one? Constellation Energy. Yeah. Hey, by the way, if you missed anything, I'm streaming on YouTube. You can replay it. Best way to support me is just sub to my. I sell nothing, by the way. I have no course book. But yeah, Constellation Energy. That was the nuclear stock I was talking about. It's ticker symbol CEG. So Thoughts on Costco? What up, Paul? So Costco is a great business model. You have to have a subscription to get into a Costco store, and whether you go to the store or not, they're still collecting that monthly high margin subscription. Also, whenever you go, consumers are happy to go there because you're buying stuff in bulk. So you get a good deal. They have some loss leaders like the $1.50 hot dog and the rotisserie chicken. And check out the net income they make. They're making pretty much, if you average it out here, over $2 billion of net income every single quarter. You get a 0.5% dividend yield with Costco. I love the business model. The only thing I don't love is the high multiple. They trade at 50 times net income, which is a little expensive, but they deserve a high multiple. But because of the high valuation, I love Costco and I would happily own them, but I would want a better multiple, a better price, but I might not get the ability to pay a good price or multiple I'm happy with. So Go said PayPal, it's at a 5-year low. So there are a few things to note about PayPal. Yeah, look at this. This stock looks like your average DocuSign, Roku, Peloton, where they spiked up in 2021 and have just been down bad ever since while the market's at all-time highs. Like PayPal is the same price that it was back in 2017. So let me share with you why I think the multiple is so low. Like they're trading at a 14 times PE. That is like where they're not expected to create or lose you any value. This is like a commodity multiple. What's their total payment volume now? $443 billion. That's crazy. But here's why I think they have a bit of a lower multiple, because they're just not too growthy anymore. Like revenue's up 5%. When you add inflation to that, like the actual organic revenue is only up 2% year over year. But here's the good thing I like about PayPal. The best part about PayPal, in my opinion, why I think they're worth looking into, is because of the buybacks. You're not going to believe this. So they make over $1 billion in net income a quarter. That's pretty cool. $1 billion in net income a quarter. If we go over here to their their net common stock issuance, they're actually buying back over $1 billion of their stock every quarter. But you're saying, what does that do though? What does that do for you as a shareholder? Well, it gives you significantly more ownership in the company. It makes the EPS go up. But basically, when a stock buys back their own stock, it forces it to go up. So check this out. Here's how you can tell. The net income is up by 11% year over year. So the net income's up by 11, but the net income per share is up by 19 because there's 7% less shares that exist. Isn't that insane? Isn't CEG overpriced as it is? It definitely looks a bit overvalued here. I wouldn't touch it, but it's really because the multiple's high because they're getting, they're going through the Calpine acquisition, which as soon as that goes through in Q4, it's going to instantly add $2 of yearly EPS and $2 billion plus a yearly free cash flow and synergies accretive. It's crazy. Yo, what up, Mark? You said, I have a little gem for you, FRHC. Let's check it out. Wait, FRHC. Let's see what this is. Freedom Holding. Look at that. They're at an all-time high. So, pretty much. So, congrats if you own this stock. You got to be up on your position. Let's see. So, they're a brokerage. They're in insurance and banking. So, that's really, I like how diversified that is. Insurance up 20% year over year. Let me look at this on an annual. And let me just go down here. Let me blend this together. Let me look at their total revenue. So the revenue is up by 17% year over year. And they, for the most part, are net income positive. They had a little one-time adjustment last quarter, I'm assuming. I know the insurance businesses can get a little tricky because they're inconsistent whenever you collect the bulk of your profits. But I can see why this one's at all-time high. Let me see their brokerage. How's that doing? So brokerage, that is, that's only up 0.7% year over year. So it's like a mixed bag here. The insurance business is up 20, but brokerage is flat. That's an interesting stock. I'll put them on the watch list. 3 businesses I'm interested in. I love insurance. I love brokerages. I love banks. All right. There's a stock I wanted to look at there. What was it? Duolingo. Yeah, what up, Rand? Yeah, Rendeco, what's up, dude? I love this stock, actually. Yeah, really, this stock is being hurt from the AI thesis. ChatGPT, Google just made a competitor to Duolingo. But this company right now, it's not a problem yet because their numbers are so good. It's definitely something to keep in the back of your mind. But for right now, the business is booming and doing insanely well. This is a subscription model company. If you don't know, Duolingo is like that language learning app. And check out how growthy the business is. This is nuts. The subscription revenue is up 46% after growing 51, after growing 45, after growing 50. This is insane growth. And if you don't pay for their subscription, you see ads on their app. And if we look at their advertising revenue, it's up 55% 60% year over year. So every business on Duolingo is growing. If we look at the free cash flow, that's what FCF stands for. Free cash flow is up 60%, revenue's up 41, and the net income's up 84. So that means they're expanding margins. Record 17% margin. It's never been even close to that. So great news on Duolingo. I think they're worth putting on the watch list and even nibbling on and buying a little bit right now. Not financial advice, of course. Someone said, how do I get started with this? Well, hey, if you just want to get interested in stocks, you got to have a brokerage. This is I have all these brokerages in the link tree in my bio. If you want to get any of them, I have Robinhood linked up there. Moomoo. This is my favorite brokerage right here, the most useful one. It's the one I've kind of been on the whole time. If you like analyzing a company, if you want to get this app I'm on or this brokerage, it's in the link tree in my bio, the very first link. So someone said, Grab Stock. I love this company. This is like an Uber. This is international Uber. Like, I kid you not. If you're wondering what does Grab do, they literally do exactly what Uber does, but in all these other countries. Notice the US and Canada aren't on here. They're in Malaysia, Indonesia, Singapore, no Canada, no UK. And that's what I love about them. The fact that none of it comes from the US or Canada. So it's an international play, and they grew so much attention that this is the best part. Uber decided to back them. Uber is now the very largest shareholder. Uber owns 13% of all the shares, and then Toyota Motor as well owns 5.5% of all the shares. So they have some great partners, great shareholders. The business is booming. The revenue's up 23 after growing 17. They're net income positive every quarter. They have no net debt. They're free cash flow positive every quarter. So in my opinion, this one's worth putting on the watch list. They might be a little pricey right here, but I can totally see why they're at all-time highs or new 52-week highs, while the S&P 500 is at all-time highs. Like, their fundamentals are good. So I wouldn't call you crazy to buy them. Someone said Procter & Gamble. Yeah, this is a great consumer staple company. Like, they own so many brands you've heard of, like Gillette, Old Spice, Tide, just a bunch. Look at this is like just a buy and never sell kind of stock. Even in a recession, people are still buying this stuff. Fabric, home care products, baby, feminine, family care products, beauty products, health care, grooming. So very diversified. And check out the profits they're making. They're literally making $3 to $4 billion of after-tax net income every quarter. And since they're making so much money, they're deciding to share that out with you as a shareholder. So you get a 2.6% dividend that's completely safe, in my opinion. So Procter & Gamble's a nice dividend growth company. What brokerage are you? Oh, yeah. Hey, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. Yeah, it's my favorite brokerage. It's called Moomoo. It's an affiliate link too, so it helped me out. It's free though. So what up, Mo? Good to see you, my friend. Hope you're having a great Saturday. What's going on? Give me a good one. Yo, I'll tell you, none of this is financial advice, of course. My newest position here is actually, I bought one share of this one. As much as I love this company, I'm not going to put a crazy one in this one, but this is the only publicly traded vibe coding play out there. And I decided to buy one share. Now I'm literally up 0.1%. So yeah, I literally just bought them. Another stock that I also just bought more of is SFM, Sprouts Farmers Market. I'm just showing you what I'm buying. Of course, always go do your own research. Don't buy anything anyone ever says, like, add it to your watch list and go do research on them yourself and see if it's something for you. So let's see. Do you think Amazon is a good buy at this point? Absolutely. If your intention, like me, is to literally just buy and never sell Amazon, if you told me you're buying the stock right now and your intention is to buy and never sell it, I would applaud you, because that's what you just should be doing. And if you also, you should not financial advice, dollar cost average into a stock. If you really want to buy it, don't just spend all your money at once on one day and then never buy it again. Start off slow and then start off small and then slowly add to your position over time. It's a more disciplined, patient approach. And Amazon is a business you just want to buy and never sell. Like, they're an ETF in one, they're an e-commerce play, advertising play, a cloud play. They're literally a UPS, an Instacart, a Walmart, all in one. Look at their AWS business. This is actually their most valuable business. They're the number one cloud play, number one market share. It's over $100 billion of annual revenue for them, just their web services, and it's their highest margin business because they're not making too much margin shipping you a package overnight. And check this out right here. If we look at the revenue's up 13, so that's good growth. The revenue's up 13, but the net income, the profits are up by 35. What does that mean in English? That actually means they're expanding margins. They now have a double-digit margins when, it used to be a tough buyback here. They even had negative margins and then single-digit margins. So from a fundamental point of view, I really love Amazon. You know, they're a robotics play, warehouse play, real estate play. They have an irreplaceable like 60 to $100 billion real estate portfolio. I I really love Amazon, and I might be biased because I literally own them in here. So of course, keep that in mind. All right, so what up, Giuseppe? What's up, dude? He said CPR stock. What's this one? Let me know. Are you talking about Allied Copper Corp? Um, we can't view that one, unfortunately. I couldn't find that stock. Sub Nathan, did you understand my message about Weeble earlier today? Yeah, yeah, I did. You said you didn't like them because of the support and Chinese. Or what up, dude? Yeah, yo, no way, dude. Thanks for all the gifts there. I really do appreciate that. No way, the homie KC is here. Good to see you, my friends. So here's BBAI. This is. I don't love the fundamentals here. Like, I'm gonna just show you the numbers for yourself, and then you can kind of draw your own conclusion. Here's the one thing I know about this company. First off, the revenue isn't growing. The revenue is actually down 19% year over year. So just do beware. The revenue is down 19%, and they lost 230 million in net income this quarter, 60 mil last quarter, 150 mil this quarter. So just know, like, revenue's negative. They're losing a lot of money. They're diluting you. I'd be a bit careful, but there is one good little catalyst I did see that came out. I do want to share with you this as well because I think you'll like this. But I'd just be so careful with this stock. Well, maybe I won't be able to find the news. Anyway, they opened up some like new data center in like Asia. Yo, no way, dude. Thanks with all the dinosaurs, dude. No way, thanks. Thanks so much for all those roses. Which app? Oh, what app is this? Yeah, hey, Rain. If you want to get this, this is a brokerage. It's where you buy stocks on. It's in the link tree in my bio, the very first link there. If you want to get it, it's my favorite brokerage. All right, so let's see. Let's look at some more stocks here. Good catalyst with Big Bear AI. Yeah. Yeah, they did like, I think it was over $1 billion. They did like $1 billion contract. Yeah, hey, user, again, if you want to get this app I'm on, it's in the link tree in my bio. The very first link there. It's where you buy stocks on. It's brokerage. So anyway, let's keep going here. Campari. Let me type that in. Yeah, I can't find that company. Yeah, CPR. Yeah, see, I typed that in and it's just not on my brokerage. It must be on some weird exchange. I apologize there. NVO, someone said, yo, Shaked, what's up, dude? That's your weight loss prescription play. If you're looking for, actually, this is the company that owns Ozempic. So if you've heard of Ozempic before, Elon Musk is on it. This is the stock that owns it. How are options on this stuff? Yeah, I love options on here. I don't do options, of course, but there's so many different strategies and stuff. If you did want to do options, of course. But anyway, let me get back to Novo Nordisk here. I love all the tools you get. Like you can see the analyst ratings from literally, you can see what institution they're from, and you can see the individual analyst and their ratings and stuff. Oh, and the Morningstar research. This is really cool. You can read like, what did the bulls say? What did the bears say? One of the thing on the bear case is that their patent for Ozempic actually expires in 2 years. So that's unfortunate. Do you have to have a computer to do this? No, I'm on my phone right here. I'm literally on my phone, and I'm just Apple TV screencasting it to my computer right now, so I can stream it. But yeah, that's the reason they're actually trading at this industry low multiple. Industry average, net income multiple is 22. Well, they're at 14 because of the uncertain future of the, exclusivity for Ozempic. They're also seeing increased competition from Eli Lilly. But yeah, look at that. Literally 93% of all the revenue comes from their obesity care products. And yo, dude, shout out to Danks in the chat. Dude, no way. Danks, I thank you so much, my friend, for all those gifts there, bro. If you got another stock you want to look at, let me know, dude. No way. With a bunch of cowboy hats and stuff. Yo, please don't donate anymore. Save that cheddar for yourself, my friend. Check this out right here. This is the net income. This is insane. They're making over $4 billion in net income a quarter. That's why I actually like Novo Nordisk right now. Oh, this app is also telling me, what is this right here? This is a bearish flag. Well, that's, I guess, not good or something. That's the technical analysis. As you know, I like looking at the fundamentals, and I think they're worth putting on the watch list because they're making a boatload of net income. They're making literally over $4 billion net income a quarter, 3.3% dividend yield. I like them, but there are some risks, and I think they're mostly priced in for them. So the risk to reward might be decent on that one. What's this app called? Oh yeah, hey, if you want to get this app I'm on, this is a brokerage where you buy stocks on. It's in the link tree in my bio, the very first link there. How far out do you buy? Are you talking about options or for stocks? Or that must mean options. Yo, and KC said Pepsi. Let's do it. All right. So yeah, hey Brando, if you want to get this is I'm on a brokerage right here. It's in the link tree in my bio, the very first link there. It's where you buy stocks on. So it's not your traditional Joe Schmo. Okay, here's PepsiCo right here. This is a good company, but the growth has stalled, and that's why the stock has been flat for a while. If we're looking at Pepsi, they're actually the same price as they were in 2019. So the stock's kind of been flat for 6 years. Why? It's because investors are a little concerned about the growth. Like the revenue is only up 1% year over year. Like when you add in inflation to this, it's a little tough. You know, revenue's up 1. If we go to the profits are down by 9, but still they're making good money. 2 to 4 billion in net income a quarter. But we want to kind of see the growth come back. I love their brands. Dude, has anyone heard of Popcorners, Doritos, Flamin' Hot Cheetos, Mountain Dew, Baja Blast? You know, I love a lot of Pepsi products, and they own Frito-Lay, dude. I love Frito-Lay. Okay. Okay, that's not good. Thanks for someone who said muted. My microphone, I don't know what it's on my webcam right now. I feel your pain. I'll switch in 1 second. There we go. Test, test, test. Okay, we're working. Sorry. Okay, I don't know what we were talking about there. Someone said I sold Micron for a 64% profit. I don't know where it cut off at, but thank you. Sorry for that. But yeah, someone said I sold Micron for a 64% gain. Wait, hopefully it's working. Let me double check. Yeah, okay, it should be good now. Perfect. Okay, we are good. So someone said I sold Micron for a 64% gain. Here's why I think that that might have been a small mistake. One of my biggest mistakes has been selling out of great companies for a gain. I think they're worth trimming, but not fully selling out of. Don't fully sell out of great companies like this. I actually think Micron has the ability to go even higher because they're one of the cheapest semi plays out there. Like they literally trade at 20 times net income, and that's not propped up on some like one-time gap adjustment. Like they really trade at this low 20 times PE, and they're just as growthy as your Nvidia, your Broadcom. Like look at the revenue. Revenue is up 46% year over year after growing 93. And check out the margin expansion. The net income is up 260% year over year. Went from 888 million to 3.2 billion. I love the profits on this company. They had a huge. I think they beat on net income, they beat on EBITDA and revenue. So it's a triple B quarter. I'm not shocked to see them higher, but still, they're trading at 20 times net income. I really feel like they could go a little higher. Let's see here. Danks said, can you do Rich Tech Robotics? Ooh, so yo, thanks again for dude. Shout out to Danks for all the roses there. I really do appreciate you. I would not recommend this stock if I'm being totally honest. Yo, what up, Jeremy? Yeah, we'll get to Keurig Dr. Pepper, AvePoint. So here's the thing. If you're looking for a real robotics company to trust, it's tough trusting this one. If you look in the top right, this is an $800 million company. So $800 million, very small company. And look at the revenue every quarter. Like, just know, like, this is a company doing legit $1 million of revenue a quarter. They're losing millions in net income every quarter. They don't have any real IP or patents. If you're looking for like just a real robotics company to just buy and never sell in diamond hand, I wouldn't recommend that one. I'd recommend an Amazon or even a Symbiotic right here, which helps out Walmart. They're a warehouse robotics company. So hopefully that was helpful. Let's see here. AVPT. Now, this is a stock that deserves to be at all-time highs. Or, well, at least, well, wait. I haven't seen their most recent quarter. They gapped down like crazy on their earnings day. So let's go see what those numbers were. I am curious. So they beat on revenue, they beat on net income, and they beat on EBITDA. It was a triple beat quarter, but the stock still fell. What that usually means is that they lowered guidance, or they said something investors didn't love, or they hinted at something in the future. But if we look at the revenue, I still love this. It was their first ever $100 million quarter. Revenue's up 100%. I, mm, Sorry, I'm a little sick right now. But yeah, I like that in the past 2 quarters, they've made net income both quarters. Yeah, this is a net income positive company. This is really a company that's going to be making net income every quarter. And if we look at this balance sheet right here, this is an incredible balance sheet. Notice their liabilities are staying the same every quarter, but their assets are going up and up. So their asset to liability ratio is going down. Went from 51 to 36. Like everything on this company is headed in the right direction. They're profitable. They're growthy. Maybe they just have too high of a multiple. Okay. So Saul said GDX. This is the gold mining equity ETF. So yeah, if we look at the actual commodity price of gold, it's literally at an all-time high. And let's see what their top holdings are. Oh yeah, so Agnico, Newmont, Goldfields, these are some of the better ones, I will say. So yeah, I'm not shocked to see that at all-time highs, especially if we look at the actual commodity of gold, which is ticker symbol IAU or GLD, either one. The literal commodity of gold is at an all-time high. So if you got any gold chains, gold jewelry or something, maybe go hit up the pawn shop and sell it if you don't need it. You can get the most money pretty much ever for it. Hey, what up, Crispy? Yeah, I feel you. Sprouts Farmers Market, they cannot keep falling. I feel you, dude. So Mo said AU stock. So this is just another gold company, Anglo Gold. So again, this huge rally is just explained by the price of gold. It's like a pseudo gold play. They might have a dividend too. So Gary said Nvidia. Yeah, let's do Nvidia. And then I saw someone say Meta/Google. Yo, which one shaked? I love both of those companies. I own both of them, full disclosure. But check out Nvidia right here. This is a stock you just buy and never sell. Great fundamentals. Like own it, don't trade it, as a lot of people, or you could trade Nvidia. They are pretty volatile. But I love these metrics right here. Like obviously we know they sell GPUs, but they have a 20% PC GPU market share. That's great news. They have this automotive software. Lucid actually uses their automotive software, but mainly this is a data center play. As we know, data centers need GPUs, and NVIDIA makes their own GPUs. And check out how growthy this is. They did $46 billion of revenue. Out of this $46 billion of revenue, legit $26 billion of it was after-tax net income from them. They had a ridiculous 56% net margin. So you go spend $100 on one of their GPUs, they pocket $56 of after-tax net income on every sale. Their margins are ridiculous, and that's because their top customers are literally the Mag 7. The other Mag 7 stocks. So NVIDIA is a beast. They also just took a $5 billion stake into Intel. They took a $100 billion stake into OpenAI, I believe, for them to buy more chips. And NVIDIA has their whole own like ecosystem. Let me show you the NVIDIA portfolio if you've never seen it before. Oh yeah, we can view like all the super investors portfolio. And NVIDIA owns a lot of CoreWeave, APLD. They own ARM, Nebius, WeRide. So yeah, pretty cool. Problem is how much NVIDIA can increase. Yeah, Jake, you're right. It's called the law. It's like the law of large numbers. Like NVIDIA's worth $4 trillion. For you to double your money, they have to go to $8 trillion, and it's kind of hard for them to do. That is a good point there. 70% on Google, 40% Meta. Yo, I own both of these as well. They're great. Let me go over Google. Like this is an ETF in one. They own YouTube. They own Android. They have the Google Cloud. They own Waymo. They're in quantum chips, TPUs. Like this is a beast, and they're only trading at 26 times net income. That implies that maybe Google could go even higher. Like if someone said right now, I'm buying shares at Google, I have the intention to never sell it, but I'm going to buy shares here at this valuation. Like I wouldn't call you crazy. Like I really love Google. And yeah, look at their Google Cloud business. This one's been pretty growthy recently. It's up 31% after going 30, after going 30. Really good growth there, but they just literally print money. Google makes 25 to 35 billion in net income every quarter. And what is Google doing with basically 30 billion of after-tax net income a quarter? Well, since they have so much leftover money, they literally deploy half of that into share buybacks. That's why the stock doesn't go down. They literally spend $15 billion of their after-tax net income every quarter on share buybacks, and they only spend $2.5 billion on their dividends. That also means there's a lot of upside for the dividend potential as a dividend growth company because the payout ratio is dog cheap. So Google, just never sell them. Love them. Might be biased though. I do own them. Yo, what up, New York? Good to see you, bro. How you doing? Yo, free me. No way. Good to see you, free me. Kdu, he said, I prefer Google over NVIDIA just based off PE alone. I agree. I do. I think they're cheaper. What's your take on crypto altcoins, or on BMNR. So yeah, these are basically just crypto proxies. Now, I don't know if like it, all this company does, if you're wondering what does this company do, they just like own Ethereum and mine Ethereum. Like 91% of the revenue comes from their self-mining or whatever, but it's an Ethereum holding company. So you really trade these off their NAV, net asset value, just like the Bitcoin mining companies, like they trade at their value of the Bitcoin usually, or a slight premium. I don't see them actually outperforming Bitcoin and Ethereum in the long run, especially with new NASDAQ rules. Especially the Bitcoin mining companies now need extra shareholder permission to issue shares the way they've been doing it, because I don't think investors know. Like, let me show you MicroStrategy, for example. I've never seen a company do this. And this is what makes the Ponzi work, though. This is what's so cool. If you go to their cash from investing activities, if this is positive, if this number's positive, that means they either issued debt or issued shares. And their debt hasn't gone up, so that's literally them diluting you by issuing shares. Just this quarter, they diluted you by $7 billion, but with that $7 billion, they bought $7 billion in Bitcoin, and that Bitcoin is up like 10%, especially this quarter. They spent literally $18 billion diluted you, but bought $18 billion worth of Bitcoin, and that Bitcoin's up 30%. So I just gotta be, I'd rather just own actual Bitcoin or Ethereum. Hopefully that was helpful. Amazon looks good. I agree. Nvidia looks great. Amazon looks great. Yo, Trapper08, good to see you, brother. SESAI, what's the ticker symbol for that one? MSTY. I'd be careful with the covered call ETFs. These just don't really outperform in the long run. Like, if we look at this one, it hit an literally all-time low basically on Friday. So you basically buy these to maximize your dividend income. You don't really outperform. It's like a slow bleed of your capital, if I'm being totally honest. Like, these underperform the S&P 500 in the long run. So it underperforms the 8% CAGR of the S&P 500, and you're paying a 1% expense ratio fee. So you're already losing by 1/8. It's just a tough, I don't think investors really know what they're buying there. There's also return of capital. There's net NAV erosion. Like, there's so much people don't know about. It's not just simply them selling calls, and especially on the stuff they're selling calls on, like Bitcoin, and like all their calls get called. Like, just tough. It's tough. Okay, can you look at what's that one? BlackBerry stock. Yo, this one was .com bubble huge. If we look at them, look at this one. This was 2008. This was a $200 stock. Now this stock is $4. So let's go look at what their earnings were. I am curious about that. So they beat the orange line's what the analyst expects. So if they beat on revenue, I'm not shocked to see them, up. So they beat on revenue. They beat on net income by, double. I guess they expected 1 cent. They reported 2 cents. So I guess they beat by double. And actually it was a double on EBITDA as well. So I can actually kind of understand why the stock rallied up. Was this real? Yeah, they really did. Well, it wasn't exactly 13, but they probably made like 6 to 8 million of after-tax net income this quarter. Revenue is only up by 2.69, but that was slightly better than what the analyst expected. So I don't think that's a great long-term hold. Probably a swing trade stock. Any thoughts on Intel in the most recent rallies? So yeah, I wouldn't even be talking about Intel if it weren't for the government stake deal and the NVIDIA deal. Like, this was like not even worth talking about if government and NVIDIA didn't take a stake. So we don't have much metrics to look at here because the actual numbers are bad, but the sentiment has changed with the new government stake. If we look at their GPU market share, they actually have a big 63% PC GPU market share. NVIDIA is going to move a little bit of their manufacturing of their old crappy chips to Intel in the US. And check this out. We can see their net income. They're burning through net income every quarter. $3 billion, $1 billion, $17 billion that one quarter, and they're burning through free cash flow as well. $2 to $4 billion of free cash flow. So the future sentiment's good there. We don't really look at their financials. Yo, it's Engrika. Good to see you. How's Open? Oh, Open Door. Yeah, let's do Open Door here. So this one is another huge momentum company. This is a stock that I'm going to recommend as a trade. You don't just buy and hold shares of this one, in my opinion. Like, you're buying this one with the intention to get out of it. So one reason why this stock has been momentuming so hard recently is because of the hype around the lower interest rate environment. If we go to the revenue right here, if we go to the revenue back in 2022, look at the growth rates and look at these numbers. They're making 4 to 5 billion of revenue a quarter, but as rates hiked up, very suddenly, the numbers absolutely plummeted, down 69%, down 70%. So they're super interest rate sensitive is what I'm trying to say here. And Jerome Powell just cut interest rates. Another thing we can see is what are the interest rate cuts for next month? Let me actually find that real quick. So if we go to the stocks tab right here, there's a lot of cool features on here. Like you can, oh yeah, the institutional tracker. Oh yeah, and here's the Amazon projection versus off EGP or whatever. But anyway, if we look at the, yeah, right here. There is an 80 on October 29th. There's an 87% chance of another 25 base point cut. Pretty cool. What app is this? So yeah, by the way, I'm on a brokerage right here. This is where you buy stocks on. If you want to get this app I'm on, it's in a link tree in my bio, the very first link there. So yeah, let's see here. So yeah, we get a nice interest rate cut on October 29th, 90% chance. Yo, big man, it's good to see you, my friend. I keep seeing videos of people saying they're holding Rich Tech Robotics. Yeah, we just looked at that one. I don't love Rich Tech Robotics because they're just a revenue-less startup right now. Does PBR give you dividends? Let me see if I can find that one. And I will pull it up for you. The one squib said NVAX. We'll look at that one next if we can't find this one. This is Petroleum, South America, Petroleum. So yeah, this is an oil and gas stock again. These oil and gas stocks really don't outperform in the long run. Like, did you know that this stock is the exact same stock price that it was back in 2004? So you bought the stock back then, you're actually, flat on your position. But a lot of people like this one because they see a 14% dividend yield. So they're South American, so where are they headquartered at exactly? Oh, if it would, they're in Brazil. Okay, so they're in Brazil. Where's the revenue come from? Domestic market. Okay. So yeah, they do have a dividend. That's an oil and gas stock. Yeah, a lot of the oil and gas stocks do have high yields. So NVAX, what's the stock? Let's see. Oh, dude, Futu finally had a pullback so I could buy it. Dude, I love Futu. Yeah, dude. Great. Even the multiple is so fair right now. So here's NVAX. Unfortunately, this stock is the same price or lower than it was in 2018. Let's see if we can figure out what happened here. Do they sell anything? So they do have sales actually. Okay, let's see. Ooh, so they had sales, but the sales declined. Like, check that out. The sales are down 42%. Like, these numbers look choppy. What about on the net income? Operating profit. Like this balance sheet doesn't look great either. Like, basically the same liabilities as assets. At least they're, if you average out the 4 quarters, they are kind of making net income, but it just looks a little choppy for me, to be honest with you. I would just be careful with this stock. Look at EHang. What's the ticker symbol for EHang or something? I don't know what that is. Hopefully I can get to all the stocks here. So Eagle said TSSI. Yo, this is actually a cool value play. So if we look in the top right here, this is a $500 million company. And I normally don't talk about these kind of stocks because they're so tiny. They're only worth $500 million. But here's the thing. Out of all the $500 million market cap stocks out there, I like this one because they're actually net income positive. They're making net income every quarter. It's small, like $2-3 million a quarter basically, but I love the fact that they're actually net income positive. Take some risk off the table, the fact that they're already profitable, and they're also really growthy. Revenue's up 260% year over year, so that's great news. They also have diluted you by 5% year over year, but that's okay. Let's go to, what up, MEJ? What up, dude? Justin said APLD. Yeah, Applied Digital. You know who owns Applied Digital? That one's actually in the NVIDIA portfolio right here. And hey, Caden, thanks so much for the roast there. Yeah, if you got a stock you want to look at, let me know there, Caden. Yeah, if we go to the NVIDIA portfolio right here, one of the stocks they own is APLD. It's their second largest holding behind CoreWeave. And this one has seen some crazy momentum. They've really just benefited from being in the NVIDIA ecosystem. Go to the weekly brief right here. Let's see what news we got. Expand Series G. Share authorization increase. Okay, yeah. CoreWeave partnership. APLD got into a huge partnership with CoreWeave. That's what I was trying to find there. But anyway, yeah, they're interesting. They're a data center hosting business. What's the best app to yeah, hey, I like my favorite brokerage to buy stocks on is the one I'm on right now. Yeah, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. I have as well, I have a Webull account, I have a Robinhood account. I've used all 3 of these apps for many, many years. And my favorite one is, Moomoo right here. So yeah, Linktree in bio, very first link if you want to use my affiliate link. Or you can just type it into Google, just a broker called Moomoo. So yeah. It's EH. All right, let's see. EH stock, EHang. Let's check it out right here. So unfortunately, this stock has not done too well. It's the same price that it was back in 2021. Let's see if we can figure out what happened here. So Air Mobility Solutions is what they do. And look at the full year of 2024. The sales have just recently popped up like crazy. Oh, but this is kind of the bad news. So the orange line is what the analysts are expecting them to report. Notice this quarter they missed on revenue. They missed on revenue like crazy last quarter. They're missing on net income projections. They're missing on EBITDA projections. So that might be why the stock is kind of flat. Maybe, let's see. Yeah, they're losing net income every quarter. The sales were 20. At least the sales increased. That's actually good news. Sales are up 46%. But look at the previous quarter. That's odd. It was only 3 mil last quarter. Anyway, they're losing 10 mil a quarter. What's the market cap again? 1.3 billion. It's not the end of the world, but I don't know. I got to do more research on them. That looks just a little too small for me. Oh yeah, for the people in the YouTube stream, there is no link tree in my bio. I apologize. Yeah, hey, yeah, if you want to get this app I'm on, it's in the link tree in my bio. For the TikTok folks, I just pasted my link tree in the YouTube chat. Yeah, if it's a link tree in bio, first link there. If you want to get this brokerage I'm on, a lot of people like it for the idle cash. It's where in the middle of my screen there. So someone said KHC. Yo, that's actually Kraft Heinz. Yo, Secure Well. You know who owns Kraft Heinz? And hey, 42. No way, 42. Thanks for all the roses there. I really do appreciate that, for like the 10 roses. And yeah, hey, Caden, don't worry. We'll get to Figma after this. Thanks so much. So yeah, if we go to the Buffett portfolio right here, one of the stocks he owns, he's a super investor, has to make all his holdings public by SEC law. And one of the stocks he owns is Kraft Heinz. It's actually been one of his most disappointing investments, when the company first IPO'd, the original investors forced them to have a high payout ratio for the dividend, and it's really just suffocated the company. They're now planning on splitting off the Lunchables and Kraft mac and cheese division. I've read some stuff about that. But yeah, if we go to the shareholders, Warren Buffett, which is Berkshire Hathaway, owns 27% of all the shares, and he likes the higher yielding plays. And look at the dividend; they have a 6.2% dividend yield here. But what's the growth on this company? How are the sales growing? So again, revenue's down 2% after falling 4%. So we kind of want to see the growth come back there. So Figma, let's get to Figma. Honestly, I can't give you too much thoughts because they literally just IPO, but this is, I believe, like a crypto exchange or something. Let's go look at their number. Oh, and they reported earnings too. Let me go look at their earnings. That's actually, I'm curious about that. So the revenue grew nicely. So the revenue's up 40% year over year, and they made net income on that. That's great news. If you're wondering, that was the IPO fee. Don't worry about that huge $800 million loss, but they made 30 million, 44 million, good balance sheet as well. I actually like their fundamentals. They might be a little expensive. What's the market cap? 25 bill. Yeah, that might be, dude, that makes Wix look like a steal. Hold on there. What is their market cap? I'm just checking this for myself here. Their market cap is 9 billion. Yeah, potential Figma, actually they are really growthy though. They're probably a little bit expensive, a little bit. Yeah, no problem, Secure. Appreciate you. So 42 said Fofo. Yo, thanks again, 42, for the dinosaurs and the roses there. I really do appreciate all that. Let's see. This is Hang Fang. Sounded funny to say. Hang Fang Technology. They're up 50% today. They just IPO'd. So what was the news? I don't know if there was any specific news for them to just rally up 50%. So there's no data here because they literally just IPO'd. We don't get to see anything. Do they have sales? For the entire year of 2024, the revenue was 2 million. I can't tell you what this company does. I apologize. Looks like they're consulting services. That's Fofo stock. They might be Chinese. I don't know. So you run any options? No, I actually do not own any options. Yeah, I don't think I'd recommend that 142. Well, it just looks like I just can't see any metrics on them yet. Unfortunately, I wish I could give you a real analysis on them. I sold TSSI because I wanted to trim the number of positions. Yo, me too, Crispy. Me too. So we'll look at PayPal. I'll be super quick about this one because we just looked at them, but I've seen like 2 or 3 people ask for it. I'm surprised. What's the hype around PayPal right now? I don't know, but it's one of those kind of stocks like in COVID, like it looks like a Roku, a DocuSign, a Peloton, where they peaked in 2021, and ever since then have just kind of been a tough buy. If we go to their multiple, where's the multiple? Yeah, they're trading at 14 times net income. That's, your commodity multiple where they're really not expected to create or lose you any value. That's because they're not really too growthy. Like they're just not as sexy as some of the other stocks out there. Like the revenue's only up 5%. Like when you add inflation to that, like revenue's up 2% year over year. But the good news, this is the one saving grace about PayPal and why I'd actually consider them as a small position. It's for the buybacks. If we looked at the net income was up 11, but the net income per share is up by 19. They've bought back 8% of all the shares literally in the past year. Like I said that really quickly and like didn't sound like a big deal, but that's a huge deal. They bought back 8% of all the shares in just a year. Like that's nuts. But they're the same price as they were back in 2017. All right. So I'd consider them as a small position. I wouldn't have it as a 5% plus size position or something. What stock do you recommend for day trading? I don't really day trade, but to be honest with you, I don't know. Something like volatile. Dude, no way. I can't believe it. Yo, shout out to Christina on the YouTube stream with the super chat. There's actually no way. Christina, thank you very much. I hope you're having a great Saturday with the $20 super chat. Said LAC stock. Yo, this is Lithium Americas. The government just took a huge stake in this company, I believe. That was them, right? Yeah. Thanks so much, Christina. I don't know what to say. Yo, shout out to Christina. So this company, yeah, the reason the stock has rallied up so much is because the US government just took a huge stake in them. If we go to this, I believe they're buying a 5 to 10% stake into this company. We've seen that a lot recently. Like the government took a stake into MP Materials. The government took a stake into Intel. We're trying to be more resource independent. And this is a lithium play, especially because we're poking on everyone else. We're poking everyone with a stick with tariffs right now. We got to be more independent, manufacturing independent, resource independent. So that's why I think the government is starting to make these moves right now. So yeah, that's your lithium play. Thanks again, Christine. If you got another stock you're going to look at, please let me know. Thank you so much. So PG Sky said SoFi stock. Yeah, SoFi. I love this company right here. Hey, what up, Lulu? What stocks are you holding and looking at? If you want to see my entire stock portfolio update, by the way, I have a ton of stock portfolio updates on my YouTube channel. I love being fully transparent. I'll share with you every stock that I own, how much I'm up and down on everything. I have multiple portfolios. And I'll get to that eventually. Here's my Webull account right here. Here are all the stocks that I own in here. But I want to stick with the stock analysis right now, and then we'll get right back to that. So here's SoFi stock. I do own this one, by the way. I own 24 shares of them. I regret every share I've ever sold. Oh, yeah, Solar Edge. Yes, I wouldn't buy Solar Edge. Wait, Solar Edge. That's actually the one I like, I think. I'll check back on that in a second. Remind me. But anyway, here's what I love about SoFi. SoFi has done crazy good throughout this new 52-week high level. And this is why they deserve it, in my opinion, because they are so growthy. The growth of the financials justifies the high multiple. Check this out. Their financial services are up 105% after growing 80, after growing 150. The growth is insane. Just hits a record every year, every quarter. There's no red. It literally just hits a record every year, every quarter. It's insane, the fintech growth. And also their main business, their lending revenue is up 30% year over year. So both main businesses are booming on SoFi. And I'm not shocked to see them gap up on earnings because they're beating like crazy on the actual analyst expectations. The orange line's what the analysts expect. And look, they beat on revenue. They beat on net income. They beat on EBITDA. So people are really starting to take SoFi serious, I believe. They're growthy. Revenue's up 42. They did $850 million in revenue. Out of this $850 million of revenue, $1 billion of it was net income. It's just crazy. Or $100 million of it was net income. Sorry, $100 million of it. I do own them. I might be biased, but I regret every share I've ever trimmed and sold of them. Still got 24 shares left. Hey, nice Tump. He said he got 651 SoFi. Yo, you must be a happy shareholder there. Are you a swing trader, just a long-term investor? Yeah, we went up 42. Yeah, mainly. You're right. I just buy and hold shares for the long run, a great high quality company, especially in this portfolio. If you look at the very top, this is called my buy and never sell portfolio. Because once I buy a stock in here, I try not to ever sell it. But in this portfolio, I'll sell out of companies. I'll swing trade stocks sometimes. Same with my Roth IRA. I do some trades in there and stuff. Yeah, here's my main. Well, there's my Roth IRA, and my main account is my dividend-only portfolio. Every stock in here pays a dividend, which is pretty cool. So yeah, most of these are dividend growth stocks, though. Google, Meta, McDonald's. So check Solar Edge. Yeah, let's do it. What is it? I'm gonna just type it in. Solar SEDG. Okay, I don't like this one actually. So this isn't the ticker symbol I remember. It's First Solar. It's First Solar, dude. Best solar stock out there is FSLR. And again, thanks again, Christina. So here's Solar Edge. This one is just burning through a lot of money. If we go to their net income right here, like it kind of makes sense why this stock has done so terrible. So look at the top right, the market cap here. This is how much the whole company's worth. And this company is worth $2.3 billion. So the whole company's worth $2.3 billion, and you're buying a company that just lost 125 mil, 100 mil, 300 million, and then $1 billion. Just literally in one quarter, they lost $1 billion. Like you're buying a business that just burns through money every quarter. They used to be profitable, used to be decent, but recently it's just been extremely negative. And we really want to see them get closer to net income positivity. Yeah, dang, the revenue, whoa. It was like 900 mil to $1 billion, and then it plummeted to 200 mil. So I'd be careful with that one. Again, favorite solar stock, is FSLR. They have actual good fundamentals, or they're not a money burning company. Actually, I want to pull this up real quick. Right here, net income. So yeah, look at this. They're literally making a couple $100 million in net income every quarter. So that's the good news about First Solar. That's probably my favorite solar pick. How's LAC? Yeah, LAC, we just looked at them. I don't have much thoughts about them. The government just took a 5 to 10% stake. It's either one of those into Lithium America. And that's what's really interesting. I think are they revenue-less? Let me just double check again. Yeah, so if we go to the revenue right here, it says no data because they never sold anything. They're basically a startup. They haven't opened or sold anything yet, but they have a good balance sheet though. No debt, lots of cash. So hopefully they'll finally have some sales soon. So just beware. I wouldn't have that as a huge position. I keep that as a very small one. So username, what up, dude? He said Nebius. Who actually owns Nebius stock is NVIDIA. The actual, hey, Tengrika, hey, thanks for the 20 roses. I really do appreciate that. I hope you're having a great Saturday. So here's the NVIDIA portfolio right here. One of the stocks they own is Nebius. And just because NVIDIA owns a stock doesn't mean you should. You should always go do your own research on it. Or even for people, like just because someone says a stock, like always go do your own research on it. Don't just buy it because someone that seems smart owns it, but judge them off their financials. And in my opinion, this is a great financially sound company, extremely growthy. The revenue went from 14 mil to 100 million, a 7x increase year over year. And if we go to the expectations by the analysts, it was a record this quarter. It was 100 million this quarter. It's expected to be 264 million in 2 quarters. Like the growth is super, the growth expectation is insane. And also they just signed, it's already gone now, but they got like a $17 billion contract with Microsoft. That's really why the stock has been rallying up so much recently. So yeah, Nebius is pretty cool. That was NBIS. Tough buying it right now at this high multiple after it's already run up so much. But if you could only buy 3 stocks to make up your portfolio, what would you say? Well, first off, I'd for sure choose McDonald's. Cody said what happens is, yeah, hey, if you want to get this app, this is where you buy stocks on. It's a brokerage. It's in the link tree in my bio, the very first link there. And yo, Tangrika with the heart, the hand heart. Thank you so much, Tangrika. I really do appreciate that. If you got another stock you want me to look at, please let me know. Thanks so much. So let's see here. CoreWeave. Should we look at CoreWeave? What up, Joe? So yeah, CoreWeave, that's what, we'll just go right back to the NVIDIA portfolio. So actually NVIDIA's largest holding is CoreWeave. I believe they own like 10 or 15% of all the shares. And being NVIDIA owning, CoreWeave has really benefited from being in the NVIDIA ecosystem. CoreWeave to acquire Core Scientific, that's a Bitcoin mining company. CoreWeave expands OpenAI computing power deal to $6.5 billion. So as we just know, NVIDIA just took a $100 billion stake into OpenAI, and then shortly right after they get a partnership with CoreWeave. Also, NVIDIA takes a stake into APLD, and CoreWeave, and then NVIDIA gets APLD, a partnership with CoreWeave. So pretty interesting. This stock I really love for the growth. If we just look at the revenue right here, like this is insane. The revenue is 1.2 billion, up from 400 million year over year. That's great growth. And if we look at the net income, this is the bad news. One thing you do got to be aware of: they're burning through a couple hundred million in net income a quarter. But look at this revenue expectation. Like it was a record this quarter. 1.2 billion was a record, but in 2 quarters they're expecting 1.8 billion. It's insane. And maybe even they'll beat those expectations with these new like OpenAI partnership, APLD partnership. Pretty cool. Why McDonald's? Yeah, McDonald's, they're actually my second largest holding. I actually just bought a bunch more shares of them. So yeah, here's my McDonald's position. I got 5K in them. Yeah, dude, this is probably the safest stock out there. Like even if we go into a recession, McDonald's does good. Well, they don't do good. They just go down less than everything else goes down. But yeah, I love McDonald's. So I actually just literally bought 2 shares of them last week. So another stock to be honest with you, a lot of stuff is tough to buy right now. How are you checking out the NVIDIA portfolio? Yeah, so hey, to check out the NVIDIA portfolio on this app, you just go to the Discover tab, then you click Insights at the top here. And yeah, you can see all these portfolios, like the Nancy Pelosi portfolio, all the super investors. They have to, by SEC law, make all their trades literally public, and we can see all them. And this app tells you all them. Oh, and like Warren Buffett. Oh, and you can like batch trade as well. So yeah, if you want to get this app I'm on, by the way, it's in the link tree in my bio, the very first link there. It's a brokerage, but yeah. If we go to the Buffett portfolio right here, well, of course, as it loads, I back out of it. Oh, well. You can batch trade follow them as well if you wanted to do that for whatever reason. So, hey, what up, Shaked? Appreciate that. Nice. Yeah, I like this one too. I have Robinhood as well. I have the Robinhood app. I have Webull, but they're just not as useful. Like you can't, like you just buy stocks on there and then that's all they do. Like with this app right here, like you can really fundamentally analyze a company. You can see all the super investors portfolio. And another cool thing, if you go to the markets tab right here, there's so much you can explore and learn. Like, oh yeah, you can see the heat map right here, pattern finder. You can see the institutional tracker, like what is Berkshire Hathaway doing, ARKK. But one cool thing that you can see is the interest rate cut probability, like the Fed information. Like on October 29th, there's an 87% chance we're getting another 25 basis point interest rate cut. You can see the Fed dot plot. You just get to see all the stuff. Actually, I wonder if we can see the CPI right here. Oh, there's GDP. Well, if it'll load in 1 second, then we'll probably. Sorry, my Wi-Fi is terrible right now. Anyway, yo, Tengrika, we looked at LAC the first 2 times you said it. I'll get to it in a second here, just because I literally just looked at it. But thanks again, Tengrika, for all the gifts there. Give me 1 second and we'll check that one out. Doesn't let me click the link tree. Oh no, hey, sorry, yeah, Cody, I typed it in. Let me actually pin this. If you go to any of my YouTube videos, Cody, the first link in the description, you'll find it. Its origins typed into Google. It's just a brokerage called Moomoo. But anyway, let's keep going here. What's an upcoming stock that's a sleeper? You mean like an IPO? I'm not sure. What are we buying this upcoming week? Yo, I'm buying more Wix, ticker symbol WIX, the only publicly traded vibe coding play right now. Have you bought Unity yet? Yo, actually, have I bought it yet? I actually don't think this is a stock you want to buy. You don't want to buy this one, in my opinion. I think they're a bit too high of a valuation. I'll just show you the numbers for yourself. You can draw your own conclusion. I love their software. I've used their software. I've made like intro 3D renders. And yo, Joe, dude, hey, thanks, Joe, for the robot hot dog or the. Thanks so much, dude. But check this out. The Unity revenue, like the lifeblood of the business, the sales are actually down 2% year over year. So the sales are down 2% after falling 15%. So that's not great. And they're also burning through a lot of money. Like they're losing close to 100 million in net income a quarter. I'd be very careful. Thank you. Good night. Gotta go to work tomorrow. Hey, Mo, have a great rest of your Saturday, dude. Thanks so much for showing up. Dutch Bros. Hey, yeah, let's look at Dutch Bros stock. So that's the only thing that concerns me for Unity is just the negative revenue growth and the negative net income. Now they do have a high moat, like they have no real competition. So here's Dutch Bros right here. Well, actually AI could hurt them. That actually I need to think about. So here's Dutch Bros. It's like a Starbucks competitor. I'd much rather own Dutch Bros than Starbucks right now. And most of their revenue, 91%, comes from their company operated shops. They're, yeah, basically a Starbucks. And this business is, for a restaurant in this environment, it's actually pretty good. Revenue's up 28% after going 33, after going 37. So I love the growth of their company operated shops. Then they also have their franchise fees that they collect, their high margin franchise revenue, where if you go spend $100 at any Dutch Bros, like $5 of it goes back to them as some high margin franchise revenue. That's up 19% year over year. Their net income positive every quarter. Net income is up 73% year over year. So I do like Dutch Bros, but more than Starbucks. Dude, Starbucks margins are collapsing. Yeah, like Mark said, Starbucks. Here's the thing. I'll be super, super quick about Starbucks. I won't give you a full little analysis on them, but here's the tough part about Starbucks. Here's why I like Dutch Bros more than them. And this also explains why Starbucks is the same price that they were back in 2019. So the stock's been flat for 6 years. Why? Because of the collapsing margins. This is bad news. Like if we go to their net income like a year ago, they were easily doing over $1 billion in net income a quarter, but now it was only 500 million this quarter, 400 million the previous quarter. Their input cost from commodities like coffee beans have hurt them. But yeah, the net income is down 47%. But you might be saying, hey, but that's still money. They still made 558 million in net income. Well, actually, they didn't. They still lost net income because if you go to their their cash flow statement and go to their cash dividends paid, they literally spend every quarter $700 million on dividends. So if they don't make at least 700 million in net income a quarter, they can't afford the dividend, and they're paying out previous money stored up from somewhere else. So they couldn't afford the dividend this quarter. They couldn't afford it last quarter. They could just barely afford it this quarter. So Starbucks is in between a rock and a hard place right now, especially with the increased competition from Luckin Coffee. So I'd be careful. What apps do you use? Yeah, hey, all the apps I'm using are in the link tree in my bio. Yeah, I have like Webull and Robinhood. But yeah, all the apps I'm using are in the link tree. This is my favorite one right here that I'm on right now. If you want to get the app I'm on right now, link tree in bio, it's the very first link there. Affiliate link, full disclosure, all those are affiliate links. So if you sign up and like deposit, I think we'll both get like a little fractional, or we'll both get like a free stock or something. So let's see here. Huge gains. What up, dude? He said BREA stock. Let's check it out. So this is Barrera Holdings. I'd be super careful with this stock because if you look at the top right, the market cap, they're only worth $59 million. So I'd be so careful at that market cap. There was some sort of good news. Yo, Tingrika, are you still here? Let me know, Tingrika, and we'll check out LAC. Yeah, BREA, there was some sort of good news there. Sponsorship, player transfers. So they must be like sports related. Engages in the business of football division progress, global football player transfer services, crypto treasury, Solana reserves. So I think one of the reasons the stock might be rallying, if this is the reason, then that's gonna be insane. They bought some Solana or something. I don't know. I'd be so careful with that one just because the small market cap. Someone said, I want to get rich, but all this doesn't make sense. How do I begin? First off, I'll say this. Stocks, the way I do it, like it's not get rich quick. It's to build and preserve wealth. Like it's the S&P 500 is basically what you're trying to keep up with. You want to just get 8% returns a year. So it's not get rich quick. It's you turn $100 into $108 in an entire year. Like, that's a long time. A whole year you turn $100 into $108, but then you get the compound effect. Then you turn 108 into 125, 125 into 160, and then you snowball up. So yeah, you just buy the S&P 500. Oh, and then you have to have a brokerage. If you need a brokerage to buy stocks on, I recommend this one. It's the one I use. It's in the link tree in my bio, the very first link there if you want to get this brokerage I'm on. I wonder what stock is associated with Ozempic. Hey, that's actually NVO. It's literally the company that owns Ozempic right here. So Novo Nordisk, I'm new to your channel. If I was to need help, would you be open to helping me? I don't do that. Like, hey, I'm sorry, I don't do tutoring. I don't sell anything. Yeah, watch out for people impersonating me, by the way. I sell nothing. I have no course, book, WhatsApp. I'll never follow you, DM you. So I wish I could help you out there, Ryan, but I just don't do that right now. I do apologize. But hopefully I can help drop some say something useful on the stream here for you. Do apologize. But here's Novo Nordisk. This is the company that owns Ozempic. They own Ozempic and Wegovy. Like Elon Musk is on Ozempic. If you're wondering what is Ozempic, well, it's a weight loss prescription. Literally 93% of all this company's revenue comes from their diabetes and obesity care products. So it's a prescription play, or actually Ozempic's an injection, but you get a nice yield here too. You get a 3.3% dividend yield. But one reason why I think the multiple has kind of been lower than the industry average is because they lose their exclusivity for Ozempic in about 2 years. So there's a bit of uncertainty in the future for their growth. And if we look at their net income right now, the business is booming. I mean, they're making over $4 billion in net income every quarter, 3.3% yield. So yeah. Okay. I still would be careful. I think the risk to reward looks pretty good. Like it's for the most part priced in. Oh, hey, and there's also saying that there's a bearish flag on technical analysis. Yeah, hey, try not to spam in the chat there. Let's see. My MD friend says this is the Century. Yeah, the weight loss prescription. All right. Oh, Rocket Lab. What up, Evan? Let's do Rocket Lab. LAC, check it out now. Hey, what up, Truth? Never lies. What up? Yeah, Lithium Americas. Again, I wish I could say more about this stock, but really the only thing that's happening here is the government's considering taking a 5 to 10% stake in Lithium Americas. They just did this with what's it called? MP Materials. The government took a 10% stake in MP Materials. And the government helped them literally with MP Materials. They're opening up this one rare earth mineral mine that'll supply the U.S. for the next 50 years with certain rare earth minerals. And I think we're trying to be more independent. Like all our resources, we're trying to be more independent especially because we're upsetting a bunch of people if war happens. So anyway, there's still a revenue-less company. Like there's still a lot of risk here. I'd still be super careful right here as like a momentum player. You're kind of just trading it off the news right now. Because yeah, if we go to the revenue, it's kind of like a startup right here. If we go to the revenue, it says no data because they've never sold anything. They've never sold a product or a service. So just beware of that. The fact that they're revenue-less, they're losing 10, 20 mil a quarter, but they have a good balance sheet. They have no debt at all, lots of cash on hand. So they're doing good financially, no real chance of bankruptcy, but we really want to see them start to make some revenue. Nice. Let's see here. Hey, what up? Wealth Chronicles. How's Tesla stock looking long term? So the thing is, if Tesla is a hopium play for the future, like I'll try to say this like not so bearishly. You're paying so much premium for an uncertain future. Like so, basically. If we look at their market cap right now, like legit $700 billion of it is like the robo-taxi and robotics being priced in. Like it's a ridiculous. Anyway, I'll just show you the numbers for yourself here. And I'm saying the unpopular opinion right here. I think most people like Tesla. But yeah, if we just look at their numbers right now, it's not great. I think their current valuation, risk to reward does not look good. That's what I'm just trying to say here. They're trading at 260 times net income. And it's okay to have a 260 times PE as long as you're high growth, but Tesla kind of just lost the growth. Their total vehicles delivered are actually down 14% year over year. You can kind of see that if we go to their total automotive segment revenue, which is 88% of the revenue, it's down 13% year over year. So yeah, that's not great. And also their energy business as well is also down 8% year over year. So both businesses are declining. Their total revenues are down 12. Profits are down by 58. Their margin just collapsed. So fortunate. Oh yeah, hey, if you want to get this, thanks again. Yeah, this app I'm on, it's in the link tree in my bio, the very first link there. If you want to get this app I'm on. But yeah, that's the only unfortunate thing I see about Tesla. Like I think the risk reward doesn't look good buying at this market cap. Like it's tough. Like revenue's down 12 plus inflation, margins are down. Like they legit have a 2 to 3% net margin. Their actual net income number, they do this all the time, bro. They do these GAAP net income adjusting tricks to make their EPS look more positive than it actually is. That's why you always look at the operating profit and you'll see how much accounting tricks Tesla has done in the past. But yeah, they only made 920 million in net income this quarter. That's before tax, so you have to include tax after this. It's tough to pay Tesla, is all I'm saying. I probably sound like a mega bear there. I apologize there. Yeah, hey, truth never lie. Again, if you want to get this app I'm on, it's in. I pasted for. Someone said that on the YouTube stream. Yeah, I pasted the link tree in the chat. But it should be in the description as well. The link. Anyway, yeah, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. So yeah, let's go. Yeah, what up? Beely said CGTX stock. This is Cognition Therapeutics. Now, I don't love talking about these kind of stocks, and they're only worth $110 million. So just beware, that's an extremely small market cap. It's like just hard to trust these kind of stocks. And yeah, look at this. It's a startup. So it's $100 million company that's doing no revenue. So startup losing, that's tough. You know, when you're worth 100 million and you lose 6 million in one quarter, that's 6% of your entire market cap. And then 8 million the previous quarter, then 8 million. And look what that does to your market cap, or what that does to your balance sheet. You know, these net income losses have to come from somewhere. And look at this. Their assets just go down every quarter while the liabilities stay the same. So they're leveraging up. Their liability ratio went from 33 to 64. So I think the reason the stock rallied up right here was there was maybe some sort of news of FDA approval, or maybe they're finally start to selling a product, but you just got to be so careful. Just because right now you're paying for the certain. Okay, so yo, Truth, hey, shout out to Truth on the YouTube stream for the $1.99 super chat. Yo, thanks so much, Truth. If you got a stock you want me to look at, let me know. I really do appreciate that. Hope you're having a great Saturday. So, all right. CCL, please. Yeah, let's do Carnival Cruise Line. Yeah, hey, we'll try and get to some of these stocks here. CCL, that's Carnival Cruise Line. Let's see. So I'm a believer that you kind of want to just trade the cruise lines and the airlines. Like these are things you trade and you don't own long term. Like if you're like if you're looking at the S&P 500 and then you're looking at an airline or cruise line stock, like these just don't outperform the market in the long run. Like I know certain funds out there literally just they buy the S&P 500, but without the airlines and the cruise lines, and they do really great. But anyway, Carnival, they're finally starting to see real profit. So I think that the rally that they've had recently is justified, and they could potentially go up even more. So if we look at this right here, if we look at their net income, this is the good news. This is the great news. This is good. I mean, they're making, net income every quarter now. Because if we go back to what happened during 2020, it was a nightmare for them. Like if we go into another recession like this, like they burned through money, literally losing $2 billion in net income a quarter. That's rough. But now, after a couple years, they're finally making consistent profits. They're making real net income every quarter. I think their occupancy rate is like 100% plus. Let's see here. Occupancy rate is 104%. That's good. Another cruise, actually, if you are looking for the best cruise line out there, in my opinion, most well-run cruise line is actually Royal Caribbean. Look at this stock. This is the company that actually is up from 2019. Carnival Cruise Line isn't. Look at this is what it's crazy about Royal Caribbean. They print money. I don't get it. Like, I don't know how they're doing so well, but they're doing very good. They're making like 600 mil to $1 billion plus, and you get a 0.5% dividend yield with this company. And what was the multiple? Yeah, 24 times net income. That's not like extremely expensive either. They're doing share buybacks. Yeah. What's a good stock you see under 20? Yo, Dank, are you saying under $20 a share? That the share price is irrelevant because you can buy fractional shares. So never. I know some people just don't like psychologically buying fractional shares, but I do. Or I just don't mind it. But under $20, I don't know if I own any. I probably own a stock under 20. Look at my watch list here. CRMD's decent. CRMD, Webull, Bull, this is a great company. Hey, not financial advice. If you like crypto, if you like banks, you'll like this. This is a crypto bank out of Brazil. Check this out right here. I think this might interest you. It's $15 a share, but 93% of the revenue comes from Brazil. So that's actually the market you want to be in because that's where they use crypto for transactional purposes. We don't, in the US, we don't really use crypto for transactional purposes yet, just because it's not too practical. But down there where their currency is terrible, like it's really useful. And check this out. I'm not just buying them for that reason. I'm buying them because the fundamentals, the actual numbers are good. This is their after-tax net income in USD. They're literally making 500 mil plus a net income a quarter. And at this growth rate, what's it going to be the same time next year? Revenue's up 30. Like the growth is just insane in use. So that's one I'd maybe put on the watch list. They're kind of at all-time highs. It's tough to, I know, fully buy them, but they deserve to be at all-time highs because the fundamentals are good. Didn't you just have some issues? I believe it, but I don't know. A gold stock you recommend? Yeah, hey, actually, my favorite gold stock out there, and it's actually RGLD. It's actually a royalty gold company. Super high margin. Literally 62% of the revenue comes from their stream, and then 36% comes from their royalty interests. And if we look at them, literally 63% net margin. Revenue's up 20. They're making a lot of net income every quarter. So it's kind of like exposure to gold. Plus, you get a dividend too. You get a close to 1% dividend. So, yeah, that's one gold stock I kind of like. I bought 200 shares of Bull. Hey, let's look at Webull right here. I have Carnival average at 1612. Oh, hey, nice. I expect dips of coming. Me too. That's why I have some cash on hand. Like if you look in the middle of my screen right here, and I like that it earns interest as well. So it's not just like cash sitting in a checking account. But yeah, I have $1,000 of cash earning daily interest, which is pretty cool. But let's see this next stock right here. Yeah, things are looking a little expensive. So let's look at BULL right here. This is a competitor to like Robinhood stock. And I do have Webull's a good app. I use them. Here's my Webull account. I've probably given them a lot of transaction fees and stuff like that. So, but they just IPO'd, and honestly, the thing I love about them the most is the growth of the revenue. The revenue's up 46% year over year. And check this out right here. Literally in the most recent quarter, they introduced crypto back to Webull. How do I know? Because I've been using Webull. I wonder, it's not going to, they just introduced crypto back to Webull, so you can now buy crypto on here. I think that's going to be a huge earnings tailwind that's going to help out the growth even more, because that's where Robinhood makes most of their net income, if you didn't know, off the crypto transaction fees. It's a lot higher margin than like when you go and buy or sell a stock. So I am curious to see that growth for the future. They are still struggling with profitability right now. They lost net income this quarter, but I really just, I wouldn't call anyone crazy for just buying a little bit of them and just holding for the next couple quarters. Like I wouldn't have them as a huge position. I'd have them like I do like super micro or like Robinhood, SoFi, Reddit. Don't have them as your largest holding or anywhere near your largest holding. Just put a couple $100 in there and you'll feel happy about it if it goes up, and you won't feel like you missed out. But don't also go all in on them, because there's also, some risk. What's a good entry point for Webull? Maybe even right here. Maybe even right now. Again, maybe nibble on it right now. Okay. Have you tried 1 ounce gold futures? I don't know. Hey, what up, OZK? I don't know what that is, but yeah, the actual commodity of gold is just ticker symbol IAU, or we could look at the spider one, GLD. They literally are the exact same. So, man, I guess my Wi-Fi just doesn't want to load it. Yeah. Hey, by the way, if you want to hit the follow button, we stream every day. This is our second stream of the day. We've done 2 streams today. So sometimes I stream twice a day. We're going to be streaming twice again tomorrow. So yeah, if you want to hit the follow button, we stream every day. I sell nothing. I have no course, book, WhatsApp. Watch out for people impersonating me. So, you know what? That's a really popular one. You know what? Let's just do Apple then. Why not? So yeah, this company's at an all-time high. It's Mag 7. You just buy and never sell this stock ever, in my opinion. Let's see what their market share is. So Apple has a 17% smartphone market share, which is pretty cool. Most of their highest margin item, the iPhone's half the revenue. That's hardware. But their highest margin business is actually their software, their services business. If you go spend $100 in the App Store, legit $30 of it goes back to Apple as 100% developer royalty. And this business is now over $100 billion of annual revenue for them. So that's their highest margin business. Then they have the Mac sales, the wearables, the iPad. And here's also why Apple's a bit affected by tariffs. I actually always thought it was more, but only 36% of Apple's revenue comes from the US. Then 26% comes from Europe, 17% comes from China. So they're very internationally diversified, but I love the profits Apple makes. Like, it's actually ridiculous. They make 25 to 30 billion in net income a quarter. What is Apple doing with all that net income? Well, they're just deploying it all into share buybacks. They have the largest share buyback program of any stock in the world, on the planet. They literally, what other company is doing this? This is enough money for a lot of stocks it owns entire market cap. Apple literally spends $25 billion of their after-tax net income every quarter solely buying back their own shares. Like, that's insane. And they only spend $4 billion on their dividends. So they have so much room to raise their dividend, their 0.4% dividend. They're doing insane share buybacks. Here's the power of the share buybacks too. If you look at the net income is up by 9, but the net income per share is up by 12. I tried to watch you on YouTube, but I don't think you can see me there. So I watched on TikTok and said, I should be able to see you there if you'd comment on the chat. But hey, yeah, whether you watch from YouTube or TikTok, I really appreciate you being here, Tangrika. Thanks for always showing up. And yo, Kanza, thanks so much for the rose there, for the gift. I really do appreciate that. Kanxa. Yeah, but Apple is cheaper than Spotify, Google. Yeah, Apple is a little expensive. What's their multiple? But again, this is, one of the biggest companies in the world. 38 times net income. That makes Google and Meta look pretty cheap. If you had 5K, what sector would you put it into today? It's just buy and never sell. I'd probably put it in some sort of tech. Just buy and never sell. Christina L on YouTube. I did see you on YouTube. Yeah, I did see you. Yeah. Tangrika, you did the 1999 super chat. Yo, Christina, thanks so much. I did see that. I didn't even know that was you. Whoa, thanks so much. I did see that. One time you left a super chat on like a old stream. But yo, I really do appreciate you. I am streaming right now on YouTube and TikTok. Let's see here. Look at SANA. What is up, Ben? He said SANA. So this is Sana Biotechnology. Unfortunately, it looks like this stock is close to an all-time low. They're only worth $850 million. So be very careful with this market cap. They're only worth $850. They're close to an all-time low. And they're a startup. So if we go to the revenue, it says 0 because they've never sold anything, not a product or a service. So that's why when we click on revenue, it says no data. And dang, they lost 100 mil of net income this quarter. When you're burning through net income like this, the money has to come from somewhere. So that explains why the assets on their balance sheet just slowly trickle down every quarter while the liabilities stay the same. They're in a tough spot right now. They literally sell nothing. They have no revenue. I'd be really careful with that company. We want to start seeing them sell something, hopefully soon. Chris said, bro, hey, what up, Chris? Did you have a stock you're going to look at? My bad if I didn't see it. Vanka said Meta, please. You know what? Let's do Meta. I love this company. I do own them. I might be biased when I go over this, but I love this company. If you're on Instagram, Facebook, Threads, WhatsApp, Meta owns all of those apps right there. And they just actually introduced ads to WhatsApp. That's going to be a cool earnings tailwind. Anyone see the new Meta glasses, like the Meta, Ray-Ban Oakley thing? Anyway, look at this multiple. They only trade at 26 times net income. Like, that's pretty fair. Like, I really think Meta could stretch up to like 30 times PE before it really gets crazy overvalued. But yeah, check this out right here. They literally have 3.48 billion daily active users. Like, that's insane. Pretty much half the world is on one of their apps a day. If you look at the revenue's up 21%. So revenue's up 21, but net income is up 36. What app is this? Yeah, hey, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. But yeah, they're expanding margins. This is what's crazy. This is a $2 trillion company with 40% net margin. So if you go spend $100 on Facebook ads, $40 of it is after-tax net income for them. I love Meta. They also have so much cash on hand, so yeah. Let's see. Yeah, TerraWolf. Hey, I don't know about that one. Yo, YouTube, we looked at Novo Nordisk, not that. That's the Ozempic company. CTRE. So, Care Trust REIT. This is actually one of my favorite senior housing REITs out there. So a REIT is just a real estate investment trust, and they have to literally by law pay out 90% of their taxable income in the form of a dividend. So when we go look at their dividend yield here, it's going to look a little high, but it's completely sustainable because they're a REIT. But whenever you get the dividend, it's taxes short-term capital gains and not long-term capital gains like your typical dividend is. But yeah, CTRE, they're really growthy. They've just done this by dilution. But yeah, the revenue's up 63 after going 33, after going 11. So the growth is just that's why I love CTRE first off. But the way they got all this stuff is if you go to the cash from investing activities, they just spent $800 million buying this one UK senior housing facility. They've been doing this by issuing shares, which is normal for REIT. Anyway, I love them. I really do like them. LAC, please. Yeah, hey, again, this is Lithium America. I wouldn't really touch this one right now just because there's still basically the government's considering a 5 to 10% stake in this one. It hasn't like fully gone through yet, but the government's been taking stakes in like MP Material and other stuff. Yeah, Centigo, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's where you buy stocks on if you want to get this. All right, so let's look at Wendy's right here. Wendy's, this company, I wouldn't recommend. I'd for sure rather buy McDonald's stock than Wendy's. But yeah, Wendy's is the same price as they were back in 2007. So that's rough. I mean, that's rough. And that's because a lot of the restaurants have just been getting really hurt right now. And, it's not just Wendy's. It's not just Wendy's. If we look at like Jack in the Box, for example, like another random restaurant, like they're at all-time lows right now. They own, Jack in the Box and Del Taco. Starbucks is struggling. Like, look, even Chipotle, Chipotle. Look at their stock. Look at them in the past couple months here. Like, that doesn't look too good on Chipotle. So unfortunately, the restaurants have really been struggling. USAR stock. Let's do it. USAR. Someone said, hey, what up, Born? He said, new to your channel. What's your strategy? Buy and hold. That requires cash. I mainly just buy and hold great companies for the long run. That's my strategy. Just buy and hold for the long run, great stocks. And so yeah, here's USA Rare Earth. And I try, of course the goal is to outperform the S&P 500, but yeah, here's a $1.7 billion company. It's another rare earth mineral play. They're still a startup. So if we go to the revenue right here, it says no data because again, this is a startup. They've never sold anything, not a product or a service. So watch out for the fact that they're still revenue-less. Maybe whenever they finally start to sell a product, they'll rally up. But yeah, dang, look at that. They now have a lot more liabilities than assets. I'd probably rather buy an MP Materials or an LAC. I don't know. How's SR stock? What is SR? This is Spire. I've actually never heard of this company before. Let's check them out. The stock's actually done pretty decent. They've been flat for a while. They're lower than they were in 2019. Let's see if we can figure out what happened. But look at them the past year. They're at a new 52-week high, new multi-year high. So that's good news for Spire. But let's go look at their numbers here. They trade at 17 times net income. So that's a pretty fair valuation. So they're a gas utility company. So they probably have a yield. What's the yield? You get a 3.9% dividend. So basically 4% dividend on SR, gas utility, gas marketing. Let's see what the revenue is. So yeah, the revenue is only up 1% year over year. That's just because the price of oil has, plummeted. And they're actually making real consistent net profits. Yeah, these year over year growth rates are really good on SR. So yeah, I can actually see why they're doing pretty good. Get a nice dividend too. What's one of your favorite stocks to recommend to anyone who's new to? Yeah, hey, this is kind of a obvious, but just the S&P 500. You probably won't outperform this. Like, if you can't outperform the S&P 500, own some of it, and you won't feel like you missed out. Just even if you buy 5 to 10% of your portfolio in the S&P 500, no one will ever call you crazy. Like, that's the right thing to do, in my opinion. So just buy the S&P 500 first off as the backbone of your portfolio. Make most of your portfolio in the S&P 500, then play around with some individual stocks that you like. Like, if you like NVIDIA chips, buy NVIDIA, buy Microsoft, buy what you use. If you have an Apple iPhone, maybe buy Apple. If you have an Amazon Prime subscription, buy Amazon, buy Meta, buy Google. And I do. I own all those companies. I own Amazon, I own Meta, I own Google, I own McDonald's, I own Coca-Cola, DocuSign, like whatever, but always do your own research on it. Make sure it has good quality fundamentals. If it's an S&P 500 company, it's probably pretty good already. I try to stay away from like the meme stocks like GameStop, the net income negative companies, the startups with no revenue. There are exceptions, but I really try to avoid the super risky stuff. Or if I'm going to take risk on something, I'm going to take risk on a stock that has good fundamentals. Like literally this boring HVAC company, I bought it this year, and literally this year I'm already up 100% on them. And it's not like I bought some super risky thing. Just bought a basic dividend HVAC stock. Anyway, you can get like option type, crypto type returns and just mid cap like stocks with good financials. Like Powell Industries, I'm up 260% on this one. We bought them in 2024. Anyway, let's keep going here. SFM. Yeah, let's look at Sprouts Farmers Market. This is one I have been buying as well. If you're looking for a stock like to buy on a dip, this one, I wouldn't just buy a stock just because it's going down and it looks oversold. Don't catch a falling knife here. But this one I think is worth, of course, none of this is financial advice. Dollar cost averaging into, and I do own them, by the way. I am down on my position. I'm down like 17% on them. But here's what I love about them. They're so growthy. Like abnormally high for a grocery store. If we look at the revenue's up 17 after going to 11, but revenue's up 17 and the net income is up by 40. So that means they're expanding margins. That's insanely good. This is insanely high for a grocery store. Like Costco is lucky to have 3% net margins. Kroger is lucky to have 2% net margins, but they have like 4, 5, 8. Like they have insane margins. So I do like them. They also have no net debt. They've bought back 25% of all the shares just since 2019. What real estate stock do you recommend? Well, hey, I only own one REIT, real estate investment trust, and that's one of my Roth IRA. That's actually Iron Mountain. It's a data center REIT. 95% of the S&P 500 are customers. This has a 3.3% dividend yield, and they have a rule where they only want to have a mid 60% dividend payout ratio, so they have a safe, healthy dividend. Pretty cool. NFG stock. What is NFG? Check news on CoreWeave. What up, Jack? Yo, hey. What's the CoreWeave news? As I just looked at them, like, was there anything new? Was it the OpenAI deal or what was it? So here's National Fuel Gas. So yeah, another utility play, and they're at an all-time high right now. So that's insanely good. Like that's moving like a tech stock. Let's go see what they do. They're probably in, oil and gas industry, but let's go see. So half of their revenue comes from their exploration and production, then utility, pipeline and storage. How's the pipeline and storage business? Exploration and production's up 37% year over year. That probably beat expectations. You get a 2.3% dividend, so you get a pretty nice dividend yield. What's the multiple? 34 times net income. But they just got net income positive, so the forward PE is what you'd really want to look at there. So yeah, looks like it had that net. As soon as this one net income loss goes away, the next quarter, like the net income multiple is going to be like a 13 or something. Anyway, yeah, and they're investing a lot into the future. They're investing like 100, 200 mil a quarter. That's insanely good. So anyway, I can see why this one's at all-time highs. What apps do you? Oh yeah, hey, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. Yeah, it's my favorite app it's where you buy stocks on. It's brokerage, but yeah, I love them. But yeah, the CoreWeave stock, I'll be really quick about CoreWeave. Hey, Jace, appreciate you, man. Hope you're having a great Saturday, Jace. Always love the streams. Thanks, bro. And you got an interesting question. Do you ever get bored from viewing the same companies? No, not really. Oh yeah, here's this. I want to show 87% chance of a 25 basis point cut on October 29th. That's not too far away. October 29th, 87% chance we're getting another 25 basis point cut on that day. But I wanted to pull up the NVIDIA portfolio. That's what I was trying to do. NVIDIA portfolio right here. One of the stocks they own, or it's actually their largest holding by far, is actually in CoreWeave. I believe NVIDIA is the largest shareholder of CoreWeave, and NVIDIA just took $100 billion stake into OpenAI, and and that's helped out CoreWeave. Now CoreWeave expands OpenAI computing power deal to $6.5 billion. So they renegotiated like a higher contract. So anyway, CoreWeave's pretty cool. They're just a pure growth stock at this point. Like if we go to their revenue right here, this is insane. The revenue is up 3x year over year to $1.2 billion. Out of this $1.2 billion of revenue, they did lose net income. They are losing a couple $100 million net income a quarter, but they made $1.2 billion this quarter. They're expecting $1.79 billion in 2 quarters. Like the growth is real, and they're probably going to beat on that too. So that's just like a pure growth play. Todd said, what's his app called? Yeah, hey, by the way, Todd, this is a brokerage right here where you buy stocks on. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. And someone said, do you pay a premium for the app? No, there's no monthly fees or anything. Like when you go and buy and sell a stock, 0 commissions. There's no monthly payments. Like on Robinhood, you have to pay $5 a month. So yeah, completely free app. Yeah, if you want, or brokerage anyway. Let's see here. Yeah, Linktree in bio, the very first link there for my affiliate link if you want to help out the channel. But you can just go on Google and type it in. It's Moomoo. But yeah, someone said, oh, WMB, this is one of my favorite natural gas plays out there, Williams. This is a well-run company. And they're at all-time highs right now, and they still have a pretty nice yield. I think like a 3% yield. Yeah, if you're looking for a pretty safe yield, Williams, in my opinion, has a safe 3% dividends. Oh, 3% yield right now, and the growth has been really good lately. Let me show you that. So yeah, product sales, monetary consideration. I don't know what that is, but seems interesting. Let's see. So yeah, look at this net income. They're literally doing 500 million to 700 million of net income every quarter, and the revenue's up 19%. Someone said for the premium data. Oh yeah, so look, if right here, basically you to get that member data, your account has to be worth over like $100, I think, or maybe it's 2,000. I don't know, but to unlock certain stuff. Sorry. Yeah, hey, D Blue again. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. Someone said STZ. You know who owns STZ? Is actually Warren Buffett. We can actually see his portfolio on here. He has to make all his trades public by SEC law. And if we go to his most recent quarter, his increase in position, check this out, the fourth one there, he increased his position in STZ Constellation Brands by 1.39 million shares. This is actually a drink company. I'm not really allowed to talk about what they do, but you can kind of see why maybe Buffett is finding attraction in the stock, because it has been tanking the past couple weeks here. So yeah, they're at like a new, basically multi-year low. They're at their pandemic low. And here's why. They kind of lost their growth. If we go to the revenue right here, the lifeblood of the company, it's actually down 5.5% year over year. So that's not great. Revenue's down 5.5. And if we go to the net income, it's just a little choppy. They made 500 mil this quarter, but then they lost 300 mil, made 600 mil, then they lost $1 billion. So I can totally understand why the stock has done so bad. But I think for the most part, it probably is priced in everything bad. Yeah. So see, they have a 3% dividend yield. Whenever you lose net income, it's not good because can't afford the dividend. Anyway, it's like a recovery rebound play. WMB earnings is tomorrow. Oh, that's really interesting. We can also see the earnings hub on here. Let me see what also reports earnings. Carnival Cruise Line. Oh, hey, so Monday we get Carnival Cruise Line. Tuesday we get Nike. Oh, and then Constellation Brands. So for the person that just said STZ is on Wednesday. Let me search by watch. So yeah, the earnings really moved the stock, by the way. So oh, yeah, so Nike. Calmain is on Wednesday, too. I own that stock. That'll be interesting. All right, we'll look at a couple more stocks here. Then I got to run. By the way, if you want to hit the follow button, we stream every day, twice a day. This is our second stream of the day. We're going to be doing two 2-hour streams tomorrow, the same way we did that today. But check this out. This is UPS, United Parcel Service. I think this one might have an unsustainable dividend. Oh, hey, yeah, we'll look at Rocket Lab after this. So yeah, if we look at the dividend right here, here's the tough part. They have a 7.8% dividend. That would be great if sustainable, basically 8% of your money back every year just in a dividend. But here's the unfortunate part. Remember this, they made 1.28 billion in net income this quarter. So they made 1.28 billion in net income, and the dividend cost literally 1.35 billion. So they couldn't afford the dividend this quarter. So yeah, they made 1.28 billion in net income, but they technically lost net income because they paid more out than they made, which is unfortunate. And the previous quarter as well, they couldn't afford the dividend the previous quarter as well. So we really want to see a recovery in the net income and on the revenue. If we just go look at the organic revenue too, the revenue's down 2.7%. It's tough. And their average daily parcel volume was down like 6% year over year. So UPS is a tough one. They're just not growing. I like to see the growth come back, and I'm scared of the dividend payout ratio. I think the dividend is too at risk of. It needs a healthy cut, to be honest with you. If they cut the dividend, I almost bet the stock would like that. Are you still gonna be the username in Megatalk? Wait, what is Megatalk? Or what's up? I heard like the TikTok got sold to like 25% of the US TikTok is going to Oracle, and the data is being stored at Oracle. If you're talking about that right there, I don't know. It could be interesting. Hey, what up? So let's look at Rocket Lab right here. What stock is being traded more? What stock is being traded more with people like Warren? Like, what's the most common? Well, anyway, the stock that I see the most super investors own, like Warren Buffett, his largest holding is Apple. We go to Nancy Pelosi, her largest holding is Apple. Soros Capital, largest holding is Apple. Trump, his largest holding is Apple. It's market cap weighted, like for a lot of these stocks. Anyway, Looney, what up, dude? We'll look at Palantir. It's good to see you, my friend. Shout out to the member, Looney. So anyway, here's Rocket Lab. Then we'll get to Palantir. Palantir does have a bit of a high valuation. The TikTok replacement name. Oh, I didn't know that. So here's Rocket Lab. This one does have a bit of a high multiple, I will say, but this is quality. This is a quality company. I don't love any of the other space stocks like ASTS Space Mobile. The next 6 months are very crucial for them. But let me just talk about this stock. We look at their space systems business, which is most of their revenue, 67% of the sales. It's up 27% after growing 94%. Like the growth is insane. Hits a new record every year, every quarter. And not just their space systems revenue, but also the launch services. Ray has said what app is this? Yeah, hey, again, this app I'm on, it's in the link tree in my bio, the very first link there. It's a brokerage. But anyway, their launch services is also at a record, 46 million the most recent quarter. It's never been above that. So up 60%. So both businesses are at a new record. Hey, good night, Tangrika. Thanks again. Shout out to Tangrika for the 1999 super chat. I can't believe that. See you later. Have a great rest of your Saturday. But check this out. Rocket Lab is beating like crazy on their analyst expectations. The analysts expected 135. They reported 145. So that's really good beat. Revenue's up 36. I watched their net income, though. They are still losing net income every quarter. They also just finalized their Geost acquisition. Oh, and they just bought another company. Let me see if I can find that on the weekly news here. Yeah, right there. Rocket Lab to acquire Mynaric AG in a $150 million strategic deal. I love that they're doing M&A as well. So they're doing the Geost acquisition, that acquisition. That's probably my favorite space stock out there. Good to see you back, brother. Docs ticker, please. Yo, Ash, good to see you too, man. Hope you're having a great Saturday. We'll look at Docs, then we'll get to Palantir. So here's Doximity. They're on my watch list, actually. So let me look at their fundamentals again. I forget what they do. So they're beating on expectations. They beat on revenue. They beat on net income. They beat on EBITDA. So that's insane. They're beating on every metric and their net income positive every quarter. This is great. These are great growth rates as well. So the revenue's up 15 after growing 16 and their net income positive as well, making 40 to 80 million in net income a quarter. And the cherry on top is the absolute fortress of a balance sheet on Docs. Literally no debt. And let's see how much cash exactly. $900 million of cash. Like, I love DOCX. That's why I put them on the watch list. So yeah, I totally like this one. Completely debt-free, super net income positive, 15, double-digit sales growth. I totally like that one. So let's look at Palantir right here. Yeah, someone said, please don't invest in Palantir. What up? Oh, so yeah, one thing I can understand is that, yeah, the Palantir multiple is pretty high. So if we look at their price to sales, not price to net income, but price to revenue is 122. Like, that is really expensive. But here's why they probably deserve a high multiple. I can't pay it right now, but check this out right here. If you look at where the revenue comes from, 55% of it comes from the government. A lot of police stations are using Palantir software, and this business is up 49% year over year after growing 23, after growing 15. Like, the growth rate is growing. Like, everything's growing with this company. There's no red. Everything's green on the screen, and not just the government revenue, but also the commercial side with the other S&P 500 companies, with your mom and pop ice cream shop. This is up 46% after 30, after 10. Like, Palantir is a growth company with expanding margins. They now have exactly 33% net margin. They had their first ever $1 billion quarter. The balance sheet's an absolute fortress, no debt at all. Let's see how much cash. $6 billion of cash in the top right there. So I love Palantir. Really do. But valuation's too high for me to like really put a meaningful amount of money in at this valuation. So yeah. LPG ticker. What up, Todd? Yeah, my bad. Let's see. LPG. And then we'll get to AppLovin. Yeah, what up? Hey, don't worry. I'll get to AppLovin. Rich Tech. Hey. Yeah, hey, Lucas. We already look at Rich Tech. I don't love that one. Not a great robotics name, to be honest with you. But here's LPG Dorian. I haven't heard of this name, actually. Let's go look at them. So a $1.3 billion market cap. Let's look at... Wait, what's the short interest? I'll check that, because why not? Not that high, or 4% short interest. That's actually normal. So they do international transportation of liquid petroleum gas with its fleet of vehicles. or vessels. So where does the revenue come from? So worldwide, where are they based though? I don't think this can't be a US company because it says LPG. Well, no, they're in US. No, they're a US company. Okay. So actually that's good news. So you don't get like an ADR fee or something. So that's good. But check this out right here. I don't love to see this decline. The revenue's down 20. It's cyclical business by nature, shipping oil and stuff. But yeah, the revenue is down, 26% year over year. Not great. And are they profitable? At least they're still making profits. That's the good news. At least they're still making, a couple million net income a quarter. But you kind of want to see the growth come back to the revenue. Well, do they have a dividend too? I'm assuming. Oh, they remind me of like a ZIM or something. That's an insane 10% dividend. Is there a dividend change every quarter? It does. Okay, so interesting. So yeah, there's your shipping company. I wish Moomoo had tax. I think it does. I think you just have like when you sell. I think you. I don't want to share that. Ooh, I would pull it up for you. I think you have to go to the top. I don't know exactly. Anyway. Let's see here. What does ARCA mean? I don't know what ARCA means. Is that a ticker symbol? Please check GameStop. What up, Mark? Yeah, let's do GameStop. So this Lucas said what app you're using. Yeah, hey, by the way, this is where you buy stocks on. It's a brokerage. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's my favorite one, lowest fee brokerage. But check this out. Here's GameStop right here. This is kind of a meme stock, but one of the better ones out there if you're looking for a meme type stock. So here's one cool thing. If you look in the top right, the market cap, this is an $11 billion company. And check this out. They're worth $11 billion. And I think, oh, wait, no, they just issued more debt. But they have $8.7 billion of cash. They did just issue some debt for the first time, which was unfortunate. So yeah, before 2 quarters ago, they had no debt at all. Dang, $4 billion of debt now. The thing I used to tell people was this company basically 30 to 40% of the market cap was just their cash on hand because they had no debt and like $5 billion of cash. But now they only have they still have $4 billion in net cash. So they have $4 billion in net cash. Company's worth $11 billion. So 25% of what you're paying is just their cash on hand. And how do they get so much cash? Well, this is the thing also you got to worry about these memes like is they dilute the life out of you. They literally diluted you by $2.7 billion this quarter, $1.5 billion last quarter. But that's also how they beef up and really fortify their balance sheet by issuing shares. So yeah. You're not really buying this one for the fundamentals. You're really waiting. They look at their revenue. You're really just waiting for Roaring Kitty to tweet something. I don't really think that's a better investment than the S&P 500 in the long run. So I posted on Reddit and they told me they have first in, first out only. Oh, really, homie? That's unfortunate. That's something they should work on. I agree. How are we doing today? Hey, Tom, what up, dude? My Tom, doing great, man. How about you? Hope you're having a great Saturday. Celsius stock. Yeah, so this company actually just got a huge stake by Pepsi. So Pepsi now owns 5.5% of all the shares here. And in exchange for Pepsi's taking a stake into Celsius, they also gave them Rockstar Beverage. If anyone's heard of Rockstar Energy, if anyone's heard of that energy drink before, well, Celsius now owns that brand. And they also just acquired Alani. Like they've gone through like a heap of acquisitions lately. If we look at their shareholders, Alani now owns 8.7% of all the shares. That's what just happened the most recent quarter. That's how their balance sheet or their assets went from $1 billion to $3.8 billion. You go to the cash from investing activities. If this is negative, that means they just bought an asset and they just literally spent $1.3 billion on acquiring Alani. And now they're also going to get the stake from Pepsi, which will add even more growth to the revenue. So kind of the growth is back. Revenue's up 83 and they made $100 million in net income on that. That's great news. So actually the sentiment's pretty good around Celsius. Blue Owl Capital, is that or OBDC? So yeah, this is one of the BDCs out there. A BDC is a business development company, and these are interesting as dividend plays because literally by law, these companies have to pay out 90% of their taxable income in the form of a dividend to avoid taxes. So if we go to their yield right here, it seems abnormally high. It's because they're a BDC and it's normal for these to have really high yields. But again, these don't really outperform in the long run. Like when we kind of zoom out to the stock here, they're lower than they were in 2019. So do be wary, like you're not really buying them to outperform, but you're buying them for the dividend. So, yeah, actually, let me check the exact cost of the dividend for fun. Dividend cost 169 million, or no, 194 million. So if you look at the dividend cost 194 million, and they're not making that a net. Well, it actually, I don't know. Dividend's probably safe. My BDC that I actually chose a different one. I actually chose Main Street Capital, if you've heard of that one before. They do the exact same thing that Blue Owl Capital does, but half the yield. They only have a 6% yield. Hey, what up, Ken? How's it going, man? Ontario, what's the ticker symbol for that one? I'll try and find it for you. One said, what do you think of SLV? Is that just silver? So yeah, if you guys want to know a fun fact, all Google is worth, like the company Google is worth more than all the silver and all the copper in the entire world combined. Did you know that? But yeah, silver's done really good. Same with gold recently. A lot of the precious metals have. But those don't really outperform in the long run. You're kind of buying it as like a diversification asset into metals. Pepsi stock. Yeah, we just looked at it. So Pepsi just sold Pepsi sold Rockstar Beverage to Celsius. And so Pepsi, one thing a little disappointing, like the reason I think Pepsi is the same price as they were back in 2019 is just because they're so slow growing and technically negative growth when you add inflation. Like if you go to the revenue right here, the revenue is up 1% year over year. So the revenue's up 1%. That doesn't beat inflation. So that's unfortunate. And if we go to the net or the profits, basically the profits are down by 9%. So their margins fell a little bit, but still they print money and I love their brands. They make 3 to 4 billion in net income a quarter. You get a nice yield too. Yeah, that's the other great part. You get a great yield, 4% dividend, basically 1% of your money back every quarter. But they're kind of bringing back the growth with the new Celsius acquisition, which is great news. I love the Frito-Lay business. They own Popcorners, Cheetos, Doritos, Funyuns, Aaron said ACM stock. What is ACM right here? Hey, watch out, guys. Hey, watch out for the person in chat right there. Hold on. Let me fix that. Hey, by the way, watch out. I'll never sell anything. I have no course, book, WhatsApp. I'll never follow you, DM you. So let's look at this right here. ACM. This is AECOM Technology. Wow. This company's at an all-time high. So, congrats if you own this stock. You got to be up on your position. And even that all-time highs, you still get in near 1% dividend. What do they do? Americas and International. Wait, what is this? This is an engineering and construction business. Operation of infrastructure assets for governments and businesses. Well, that sounds niche. What do they do? Here's the Morningstar Research. I don't want to read all that. Anyway, let's just go look at this. They're trading at 28 times net income. Let's see what they do. So revenue is up. Okay, so the revenue is only up by 0.6. So maybe that's why they're trading at a little low multiple. The revenue isn't too growthy. Revenue's up 0.6, and the net income, they're printing net income though, making 100 to 200 mil a quarter. What website are you on? Yo, the Whistler. By the way, this is a brokerage. It's where you buy stocks on. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. Yes, sir. So, ORCP. Do you mean ORCL? Oh, someone said Circle. You know what? This is your stablecoin play. We just passed the Genius Act. There's been a lot of favorable regulation, I think, towards stablecoins. I think, from what I remember. And if you're wondering what is Circle, this is the company that owns and operates USDC. If you've heard of that stablecoin before, USDC, it's one of the most popular ones. I think second most popular one. And yeah, so this is a way to get really exposure to stablecoin cryptos. And I like their fundamentals here. This was their IPO fee. They didn't really lose 500 mil in net income this quarter. They're usually net income positive every quarter. So I like Circle. Valuation might be a little high here, but they're a really growthy company. The revenue's up 53%. That's great. Like that really is great. And they're making, again, that's their IPO fee, but they're making net income every quarter every quarter as well. Okay, we'll look at a couple more. All right, ORCP. What is ORCP? All right, I looked up ORCP. I unfortunately can't find that stock, and I did look. I did try. AC. Oh wait, yeah, we already looked at that one. ARCC. Yeah, this is another one of my favorite, probably my second favorite BDC out there behind Main Street Capital. This would be Ares Capital Corp. And one reason why I think the BDCs are struggling, and what is a BDC? Basically, private companies, small companies need access to capital. They need loans, and ARCC, Main Street Capital, gives them loans. They do first lien loans, second lien loans, preferred equity, and basically, as we go into a lower interest rate environment, it's kind of easier to borrow money. So a lower interest rate environment isn't great for these BDCs, which is why we might be seeing OBDC and ARCC falling a little bit, but they have still a great yield, a 9.4% dividend yield. Now, one reason why Main Street Capital has been a bit different from all the other ones is because Main Street Capital is just like those other two. They do first lien loans, second lien loans, but mainly they do preferred equity. So they own shares, they own stock in the companies they loan to. To capture a little bit more upside. So yeah, that's I like ARCC too. They're probably my second favorite BDC. I didn't get a notification for their stream. How long have you been streaming for? Oh, we haven't been streaming for that long. We've been streaming for for 2 hours. So I guess a little bit of time. I didn't even. Dang, time is flying by. I appreciate everyone being here. By the way, if you want to hit the follow button, we stream. This is our second stream of the day. By the way, we stream every single day, sometimes twice a day. This is our second stream today. We're also doing 2 more streams tomorrow. So if you want to hit the follow button, I appreciate that. By the way, I sell nothing. I have no course book. Yeah, so let's see here. Can you look at JD? So yeah, this is a Chinese company, and the Chinese retail stock and the Chinese retail companies just haven't been doing too well. Like JD is the same price as they were back in 2015. Like if you just want exposure to like a retail stock like Amazon is like a much better buy, just because they're Chinese as well. They can't trade at expensive multiples. Like you get the ADR yearly expensive, but they trade at 9 times net income. Industry average is 29. But they still make good money. Like if we go to their net income right here, the net income actually fell 49% year over year. And I thought it was a one-time adjustment, but no, that was actually real. The net income really did fall 49%. What's their net margin? So yeah, it's a low margin industry, a couple percent margin. But anyway, I think JD.com is kind of like the Chinese Amazon. I don't remember exactly, but I just be careful with that one. Oh, they now have a yield. Whoa. That I like a lot. They have a 3% yield. Technology-driven e-commerce company. Okay. And yeah, they're Chinese as well. All the revenue comes from China. Look at Oracle Power. Yeah, hey, I don't know what that is, dude. If you have a stock you want me to look at, give me the ticker symbol for it. I don't know what Oracle Power is. I don't think you're talking about the normal Oracle. So Isaac said DECK. This is Decker Outdoors. This is like they're kind of home builder adjacent. They do roofing, shingles. Our house, I believe, or maybe it's Owens Corning. I don't remember. I'm pretty sure it's Decker's Outdoors. We use their roof shingles on our house. They make literally the most quality like shingles out there. Let's see. Oh, dude, I'm such an idiot. Oh, this is a shoe company. Okay, so I'm just like, okay, so this company sells shoes. So they own a Hoka brand wholesale, and they own Hugs. So that they own. I have a pair of Uggs and Hoka. Hoka's been really big. They're in like the running shoe community right now. They're actually taking market share away from Nike. Whoa! Look at that annual growth. In 2019 the revenue was 185 million for Hoka. Now it's for the fiscal year. It's 2.23 billion. That's insane, actually. That's some good growth. The Hoka brand. Let me see the UGG brand. No one's also seen some very nice growth from 2019. Basically, Nike focused too much on their online strategy. They took all their shoes out of malls, except for the Nike stores. There were no like Nikes in a Foot Locker, except for the crappy shoes. And like Foot Locker and these other companies had to put in some new shoes, so they put in Hoka, they put in Uggs, they put in some of these other shoe brands like New Balance, and they took insane market share away from Nike. And Nike still. struggling hard. But yeah, Decker Outdoors, they're growing. I like it. I might actually like them more than Nike. They're making good net income. They're making a couple hundred mil in net income a quarter. The revenue's growing nicely. So yeah, this your shoe play. We can't look at that stock, Nico, unfortunately. Um, Cisco. Oh, I love Cisco. So yeah, this is I like them because they're doing M&A. They're doing acquisitions. They bought one of my favorite companies, Splunk. I actually used to own Splunk stock, and then Cisco bought them. And it's really led to a lot of growth in their security business. So if we go to their security business, it's now 14% of the business. Check out, yeah, this is on fiscal year. I don't like when companies report fiscal year, but that's why it says FY 2025. But like you can just see the growth here. That's really good. Again, most of that growth came from them buying Splunk, but it's still growth nonetheless. So I like that the growth is kind of coming back on Cisco. Revenue's up 7.5, but the net income is up by 18, implying they're expanding margins. Margins went from 15 to 17, and you get a 2.4% dividend with this company. That's a really good yield. So I like Cisco. I really do. Let's see. mRNA. Hey, what up, Kudo? mRNA. So I think that's that COVID company. Just ever since COVID, they've just been a tough buy because their revenue is just down and down and down. Let me actually just go check that out real quick. So yeah, if we go to the revenue right here, the revenue's down 41. Like these growth rates aren't good. Like this down 41% this quarter, down 35%, down 65%, up 1. Like they are struggling hard, and I can totally understand why this stock is at an all-time low right now. Like dare I say, they deserve to be at this all-time low level because the sales have fallen off a cliff, lost all growth, and they're burning through money. They're losing a couple hundred million in net income a quarter. So to be honest with you, Kudo, from a fundamental point of view, I'm not liking mRNA. I'd stay away from them. I'd rather buy like a Novo Nordisk or an Eli Lilly, if I'm being honest with you. I'd much rather buy that. I usually hold for 3 years. Hey, that's a good strategy. Hokas are so comfortable. Yeah, Hokas, yeah, they're comfortable. I don't actually own a Hoka pair. So I think my favorite pair, I have a pair of Skechers that I like. I have some. I mainly wear Nikes though. I have a pair. Actually, I wore a pair of Uggs last week. They're actually pretty cool. Target stock. We'll look at a few more here. Then I'm going to run. I'm really tired for some reason. So by the way, if y'all wanted to follow button, we'll be streaming twice again tomorrow. We're doing already today. We've done two 2-hour streams today, and tomorrow we're doing the same thing. 2-hour streams tomorrow. So here's why I think Target is being hurt way more than Costco and Walmart because they sell more discretionary items. Like if we go to what Target sells, only 22% comes from their food and beverage. Then, they have the more discretionary stuff like apparel, accessories, home furnishing and decorations, hard lines, beauty products. So that's the thing about Target. How's their beauty product revenue doing? It's only up 0.35. But yeah, look at the dividend. The one value thing I find in Target is the yield you get. You get a 5% dividend yield with Target, but it's not too growthy of a business. If you look at the revenue, it's down year over year. Revenue's down 1%, and the net income is down by 21%. So they're losing their margins as well. But here's the thing. We can check if their dividend is safe, and their dividend actually is safe. The dividend cost exactly $510 million a quarter. So the dividend costs $510, and they're making, $900 million to $1 billion a quarter. So you kind of buy them to maximize your dividend income. I don't really know if this one will outperform in the long run. Like I've heard, like people are saying they're slowly turning into Sears. Like anything you can get at Target, you can get on Amazon or really any other store. A lot of people used to be like Target shoppers, but it's a tough one. Like everyone at Target's always so nice though. Cynthia said, "What app is this?" Oh yeah, what app is this? Yeah. Hey, by the way, it's in the link tree in my bio, the very first link there. This is actually it's a brokerage. It's where you buy stocks on. So yeah, if you want to get this app, software I'm on, link tree in bio, first link there. My favorite one. I have all the other ones are linked up there as too. Like I have Robinhood as well linked up there. Webull too. But the most useful one, the most useful brokerage, lowest fee in my opinion is this one right here. So yeah, if you want to use my affiliate link. Link tree in bio, first link there. So ONDS stock. Let's check out ONDS. Yeah, let's check it out. ONDS. I think that's Ondas. Starbucks is tanking. Yeah, dude. Starbucks' margins have collapsed. Yo, Tommy, no way. Tommy won. Good to see you, dude. We'll look at VT after this. Hope you're having a great Saturday. So here's Ondas Holdings. Basically, there's a lot of momentum around this name right now because the growth is kind of coming back. If we look at the expectations, like it's supposed to be 9.5 million in 2 quarters. Like potentially this company could be doing like 40 to 50 million of revenue a quarter when, just the same time last year, they did 900,000 of revenue. Now it's 6 million. So at least it's not like a zero, they actually are having some revenue and us are expecting revenue to continue to climb. So at least the sentiment's pretty good. They're Ondas Autonomous Systems. I think this might be like they're a drone concept stock. Actually, you can see like the industry chain and stuff versus what they do. So general aviation, midstream, you can see like all the different stocks in the watch. Anyway, I'd be careful with that one just because the momentum around them, but very small company, very small numbers. Wouldn't have it as a huge position, maybe swing traded or something. But here's VT. Yeah, this is the Vanguard Total World Stock ETF. So this owns every stock in the world. So not just the S&P 500 American companies, but the Chinese companies like Tencent, like Nestle, some companies that are like they're Taiwan Semiconductor. They can't be in the S&P 500, so they're in this one. So anyway, VT, I love this ETF. If you're just like, this is like the stock market. You just literally buy and never sell this. Should just get like 7% returns a year. They need a new pandemic. Oh, yeah, for Moderna. A lot of companies could use another KMI and T Rowe if you get the chance. Oh, hey, yeah, let's look at T Rowe. Actually, I own this company. This is an asset manager. Hey, we'll look at AMKR. Sorry, I try to get to all the stocks. I apologize if I don't get to all of them. I have an option for ONDS on 10-3. Hopefully a good week. Oh, yeah, hey, that's probably if you were to do anything with that stock, I think options were probably appropriate. Like if you just plan to buy and hold shares for the long run, it's tough at this price, at this risk to reward. But okay, let me get back to T Rowe here. This is an asset manager. I do own this stock, but let me show you this. I'll show you my position. I'm up a little bit on them. Yeah, I'm up 15% on T Rowe, and I'm actually up a lot more than 15% when you include the dividend because T Rowe has a very lovely dividend. And that number doesn't include the dividend. But yeah, you get a 5% dividend with the stock. My yield on cost is well over 5%. Yeah, basically you get a 5% yield here, and the dividend is completely safe. Like I don't usually like buying super high dividend yielding plays, but this one kind of really impressed me. First off, this is a completely debt-free company. They literally have no debt on the books and $3 billion of cash. So T Rowe has $3 billion of cash, no debt at all, completely debt-free company. That's a huge safety net. I really liked it about the company, and they're super net income positive. They're making 500 million of net income a quarter, so they're easily making 500 million net income a quarter, and the dividend cost only 285 million. And since they have so much leftover cash, they're even doing share buybacks. That's the insane part. Since the dividend cost is so low and it's a 5% yield, they're buying back their own stock. They literally spent more on share buybacks than dividends last quarter. So pretty cool for T Rowe. They're just a shareholder-friendly company. Don't know if they won't really outperform the market in the long run. Like if you look at T Rowe, kind of zoom out on them, like they're kind of the same price as they were back in 20. Yeah, look at that. T Rowe's the same price as they were back in 2020. So, but I do own them. Hey, what up? Life's Unseen. Good to see you, man. Izzy said Clean Spark. So CLSK, this is just a Bitcoin mining company. To be honest with you, I've looked at all the Bitcoin mining companies like Marathon, Hive, Hut 8, Corz. None of them ever outperform actual Bitcoin. So hopefully, don't just believe me. Just go look for yourself. Never a scenario would I recommend a Bitcoin mining company over actual Bitcoin is what I'm basically trying to say here. Yeah, if we look at where this company's revenue come from, 100% of the revenue just comes from their Bitcoin, and they just trade off their NAV, net asset value of the Bitcoin. So I just don't see much value in that, to be honest with you. Hopefully that was helpful, though. I'm trying to bag on anyone's stock, of course. Do you day trade too? Not really. No, I just buy and hold shares of great companies for the long run. So yeah. Um, does this involve crypto or just stocks? Well, we're just looking at stocks right now. You can buy crypto on here, which is pretty cool if you like crypto. I actually don't own any crypto at all. I kind of regret that with how good Bitcoin's been doing. 109K coin, I guess, but yeah. Oh yeah, if you want to get this up, I'm on. It's in the link tree in my bio, the very first link there. So what about yeah, hey, I don't know what that is. What a dip. If you give me the ticker symbol for Atlassian, I don't know what that is. Yeah, give me the ticker symbol. So here's AMKR stock. Let's check it out. Is VT for the long run? Absolutely. That's the Vanguard Total Stock Market ETF. You just buy and never sell them. You just get exposure to a bit of every. It's like the ultimate diversification asset. It doesn't just put you in the S&P 500 and only American companies. It gets stocks from everywhere in the world, but it's also market cap weighted. So it's a great ETF. I totally recommend it. So here's AMKR Amcor Technology. Let's see. They have been on a nice recovery the past couple weeks here, but still the stock is flat since 2021. Let's see if we can figure out what happened here. So revenue, the revenue's up 3.4. So that, doesn't really beat inflation, or that barely beats inflation. So revenue's up 3.4. And the net income fell by 18. Was that real? So kinda it was. They leveraged up a little bit. I can see why this stock has been flat for a while. Like single digit growth, margins are like net income's flat / down a little bit. What's the yield? Oh, you get a 1% dividend. Look at that growth. The dividend was 4 cents. Now it's 31 cents. That's not too shabby. Thank you for responding. I'm new there. Hey, no problem. By the way, if you wanted to follow button, we stream every day. We just look at stocks. I sell nothing, no course book. And by the way, if you want to support me, the number one way to support me is just subscribe to my YouTube channel. I'm streaming on there as well, so if you missed anything and want to replay it, you can totally do that. That's what a lot of people like to do. So yeah, my YouTube channel is called Nathan Robert. You can just type into YouTube Nathan Robert, or it's in the link tree in my bio. I'd really appreciate if you hit the subscribe button, or mainly just watch a video or two. I'm just trying to build up my YouTube channel. Like I have 11 viewers on the YouTube stream, and I got 112 on the TikTok. So I'm trying to build up my YouTube stream a little bit, because TikTok's been messing with me a bunch. Like they take down my streams out of nowhere. They ban me for 3 days, and then they'll remove it from the FY For You page recommendation and stuff. So anyway, best way to support me is just sub to my YouTube channel. Let's see here. Lanford said, is Supermicro better than Dell? I actually own Supermicro computer. TikTok said live inactivity detected. Okay. I just had to fill out a CAPTCHA, but we're back. Okay, so Supermicro computer, here's what I'd be careful with. Oh, and then we'll look at TEAM after this. CleanSpark is good to buy or sell. I think CleanSpark's a sell, or I just sell it and buy Bitcoin with it. I think you'll do better in the long run with that. So anyway, here's Supermicro computer. I own this company, and I'm not buying more yet. I think they're going lower. Here's why. I would wait until like low key under $40. Like even like 35 is where I wouldn't be shocked to see them at $35 sometime in the next 2 years. That's because the margins are collapsing on Supermicro. If we look at the revenue, this is the good news. The revenue's growing. The revenue's up 7.5, but the net income fell by 35. That's the weird part. Their net margin fell 39% year over year. They just sell a commodity. They're seeing increased competition from Dell. Install your server racks for you. And yeah. And here, I'll show you my position in them if you're curious. I'm up a good chunk on them. We bought them during I've sold a little bit. Yeah, we're up 74% on our Supermicro shares. We bought them during their accounting fraud issues way back here. Yeah, there's the buy order. So yeah, we've been in Supermicro for a long time. They did actually, another good catalyst for them is they have like the $10 billion data vault contract. But I think they're going lower. I would look elsewhere for now. Okay, so Mr. Goated said FUTU stock. Dude, I own this company as well. Full disclosure, yeah, I got 8 shares in them. I think they're like the next Robinhood. So if you're wondering, then we got to remind me to look at TEAM. Sorry, I want to get to all these, don't worry. So this is, if you're wondering, what is this stock right here, FUTU? It's literally the app I'm using right now. So I'm on a broker, like this software I'm using right now to analyze stocks. This is their app publicly traded. So this is the stock publicly traded. And Again, this is a brokerage. Let's say, for example, this company goes bankrupt. Even if this company goes bankrupt, your assets on the platform are still FDIC insured and SIPC insured for up to $500,000. But it's good to but that doesn't matter. But it's good to see that this company is actually doing great. They did $330 million in net income this quarter. There's no like bankruptcy risk of the actual company we're using to keep our stocks in isn't going bankrupt anytime soon. They print money, and they have ridiculous margins, 48% net margins. They're beating on expectations. Their crypto business is booming. They make revenue from commissions and interest income. Their interest income revenues up 43% year over year. Here's how they make their money. Like if you look at the middle of my screen right here, I have $1,000 of cash, and they give me a 3.85% APY on this idle cash. But they also make a little bit of interest on top of that and keep it for themselves. So that's where, so every person who keeps idle cash in here, they earn a little bit, and that's how they make a little bit of money. But anyway, I'm very happy with the 3.85% APY on my idle cash. Better than it doing nothing. Yeah, if you want to get this app I'm on, it's in the link tree in my bio, the very first link there. So TEAM stock, this is Atlassian. Unfortunately, this stock hasn't done too well. It's the same price that it was back in 2020. But let's go look at their fundamentals. Let's see if we can figure out what happened here. So the most recent quarter, they beat on revenue, they beat on net income, and they beat on EBITDA. So it was a triple beat quarter, but the stock fell nonetheless. So maybe that means they gave bad guidance. Like that's what we're seeing right now with like ASML and some of these other companies where the actual numbers were good, but they gave bad forecasts, like the Trade Desk and Chipotle. But so revenue's up 22. That's great. Revenue's up 22, but they're still net income negative. Maybe that's it. So they're hopefully by this time next year, they're going to get net income positive. So that would be good news. I think this is like a software play. AI application software company. Anyway, that's Atlassian. I like the growth there. It looks like they'll get close to net income positivity by this time next year. Revenue's up 22 after going 20. Pretty interesting. So let's look at Open Door Technology right here. This is kind of a meme company or a momentum company right now as we go into a lower interest rate environment. So look at them the past couple of weeks here. This is insane. That's because we just cut interest rates. And check out what happened last time we were in a super low interest rate environment. We scroll back out to the revenue in 2021, 2022. This was insane. They were doing $4 to $5 billion in revenue a quarter. But check out what happened as we hiked up rates very fastly. Those sales plummeted. I'm basically saying this is a super interest rate sensitive stock. Sales collapsed 50%. And as we know, Jerome Powell just cut interest rates by 25 bips. And if we go also to the interest rate cut probability, here we go to stocks up here. And then you scroll down here. Literally on October 29th, there's an 87% chance of another 25 basis point cut. So that'll be pretty interesting to see that they're a real estate play. They just flip houses. They're not great at flipping houses. I wouldn't buy shares of them and hold it for the long run. I'd swing trade that one. But yeah. Hey, what up, Seuss? Good to see you, my friend. Hope you're having a great Saturday. What up? So Kudos said OTF, Blue Owl Technology Finance. So they're a $6.6 billion company, and unfortunately, it looks like they're at all-time lows right now. So do beware. Let's see what they do. So you get a 2.5% dividend, so that's a very nice yield. Where does the revenue come from? All the revenue comes from the U.S. The revenue grew insanely. Whoa, so they must have done an acquisition. The revenue's up 83, and that's super profitable. 63. Dude, if this is real, this is insane. They're doing 40 to 60% net margins. That's ridiculous. So their balance sheet went from $6 billion to $13 billion of assets. I bet if we scroll down to the cash from investing activities, it's booming. It's not going to give it because of the fund. Anyway, University of California Regents Fund is the large show. Anyway, you mentioned FoodTube being a good investment right now. I do like FoodTube. Do beware, this isn't ADR, so I think you pay a yearly fee, but I do have 8 shares of this one. I think they're a better buy than Robinhood. It's a great stock to own for the long run, and they trade at 19 times forward net income. And they pay you a yearly special dividend. I actually love FoodTube. Again, FoodTube is literally just this app I'm on right now. What's up? Trying to understand the info. Not used to it too much. Very interesting. Would like to. Oh yeah, hey Carmatella. Hey, that's what's up. Your future self will thank you if you're learning about stocks and stuff. Yeah, this is one of my favorite the apps to learn about stocks and stuff. If you want to get this app I'm on, I have a link tree in the bio, the very first link there if you want to get it. It's a brokerage. What company do you like that has expanding net margins? What up, Samir? Yo, probably like a random company you've probably never heard of before, like Comfort Systems right here. The reason this stock is at an all, this is an HVAC company, heating, ventilation, air conditioning company, and they have been expanding their margins like crazy. Comfort System has, Amphenol Group has. Yo, my Wi-Fi is I'm about it, dude. This Wi-Fi. But yeah, if we go to the net margin right here, like check this out. The net margin grew 43% after growing 40, after growing 30. Like this company has tremendous pricing power. So if we go to their EPS right here, like here's what expanding your margin does. If we look at the revenue is up 20, but the net income is up by 72 thanks to the margin expansion. Like that's insane. So I love Comfort Systems. That's my largest holding. FUTU is another one expanding margins. 1 hour of learning about stocks can save you hundreds of hours. Or not buying bad stuff can save you. I will say that. Can you do a stock screening on this app? Yeah, absolutely. There's multiple ways to do that. I think if you can do that maybe right here. Oh yeah, there's like there's like pattern finders right here. You can totally set screeners. Let's see what all the options are. So if you wanted to find a bearish flag or whatever, I guess it'll tell you. Oh yeah, hey, Novo Nordisk is one right here that has a bearish flag, and the rise. Let's see what the probability is. Anyway, yeah, if you want to get this up, yeah, hey, Kansa, yes sir. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's an affiliate link, full disclosure. So if you deposit $100, we'll both get like some free shares of stock. So yeah, you can see the investment themes. Like you can see the DeepSeek AI beneficiaries, the Pelosi portfolio, space stocks, the weight loss prescription companies. There's certain sectors, if you just wanted to find, like they just have like, there's just so many cool features and stuff about this app right here. And it's free. So I love it. Which stock do you suggest? Well, hey, first off, I don't really recommend anything. None of this is financial advice, but I recommend the S&P 500. And then I'd buy some individual stocks in the S&P 500. Like I own Google, I own Meta, I own Amazon, I own DocuSign, Coca-Cola. Invest in what you use. Oh yeah, hey, what up, Lost? Yeah, we'll look at SoFi. Oh yeah, hey, again, if you want to get this, I'm on a brokerage right here. It's where you buy stocks on. Link tree in bio, first link there. Hey, yeah, thanks for that. Yeah, hey, yeah, the name of the app, this is just called Moomoo. You could just go into Google and type it in, just a brokerage called Moomoo. Yes, sir. And hey, Atomic Joe, no way. Dude, Atomic Joe, thanks for the heart there, the rose. My Amazon hasn't been doing too good lately. Yeah, yo, Yorkie, I'm actually happy about that because I'm about to buy more Amazon. If your intention is to just buy and never sell Amazon, it's worth it to buy right now. So yeah. So did you say Comfort Systems? Yeah, Hogan, that was the company I was talking about with the expanding margins. That's my largest holding, actually, FIX. So let's look at SoFi. What up? Lost in the sauce, said SoFi Tech. Let's do it. Dang, my phone is so low on battery. We might have to go get the charger in a minute here. But yeah, SoFi, I believe this company deserves to be at an all-time high. And yo, Atomic Joe said, I made an account using referral. Dude, thanks so much, Atomic Joe. I really do appreciate you. But yeah, check this out. SoFi, this company, what do? They're a fintech. They have their own banking charter. 42% of the revenue now comes from their financial services, and this business is so growthy. It's booming. It's up 105% after going 80, after going 222. So the growth on this business is insane. I think people are really just starting to take them serious. You know, we can see the analyst expectations. That's what the orange line is. Orange line is what the analysts expect. And as we can see, they're beating on expectations. They beat on revenue. They beat on EPS. They beat on EBITDA expectations. So people are really starting to just take them serious. 850 million of revenue. Out of this 850 mil of revenue, 100 mil was net income. So that's great. Anyway, I'm going to go ahead and go. Can you set stocks to be filtered if they meet certain metrics? Yeah, actually, let me try this out at the top here. So if I go to, oh yeah, so if you look, it's right here at the very top left, it says screeners. It says crypto, ETFs. Click screeners right here. Oh, I've done this before. Let's see, create a screener. I think you can, there's so much you can add, like from valuations, from payout ratios, you can insert the payout ratio, from indicators, from technical analysis. So yeah, there's a lot of just stuff to explore. I also have a YouTube video on all the, okay, hey, Marky Mark said, please last one, AMTM. All right, AMTM, thanks for showing up, man. This is a Memtum Holdings, $5.5 billion market cap. I'll be quick. What do they do? 72% of the revenue is from the US. Global engineering solutions and digital solutions. Well, that business is booming. Looks like they beat on revenue. They missed on net income this quarter. Maybe that's why the stock gapped down right there. But still, overall, the things look pretty good here. They're net income positive now. Yeah, look at that. So they did $3 billion in revenue. Out of that $3 billion, they lost $1 million actually, but at least these aren't huge losses. I like the growth. The revenue's up 66 after going 52. I got to do more research on this business. Mission critical, technology driven specialty business services. All right. Someone said Applied Digital. Hey, Applied Digital, APLD, that's in the NVIDIA portfolio. APLD is actually owned by NVIDIA. NVIDIA owns CoreWeave, APLD. APLD just got a huge partner with CoreWeave, a new change. So anyway, I gotta go. Hope you guys have a great rest of your day. If you want to hit the follow button, we're doing two 2-hour streams tomorrow. Hey, you too, Joe. Have a great night. Have a great night, Looney, Todd, Tommy. Tommy, I'm so sorry. I feel so bad for not getting to those, Tommy. Oh, I feel bad. We'll get to those tomorrow, I promise. I'll get to every single one of those. So, hey, see you guys later. Thanks to everyone on the TikTok stream. Again, if you want to support me, best way to support me is just subscribe to my YouTube channel. I'm trying to build up my viewers on there. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio, but you can just type into YouTube Nathan Robert. You can replay the stream on there. Sometimes I talk too fast. I'm sorry. But if you missed anything, you can replay it. The beginning of the streams are really fun. You can see the most recent stock that I bought and the most recent one I recommend looking into next week. And then after that, we mainly just go off what the chat says and do random stocks. Anyway, hope you have a great rest of your day. Captain Brian, see you later, dude. I'll remind you next stream. Thanks, Tommy. And thanks again, Tommy, for the previous stream. You left those huge donuts. I still can't believe that. Thanks so much, man. Have a great rest of your Saturday. See you, Looney. See you, Todd, Tommy, Hogan, Lost, Jay.